Chicago. I bet you have some cool accents in here all around. So can somebody confirm that he actually can see my screen? This is Nick, by the way. LA. Cool. Thanks, Keith. Great.
Yeah. So Nick, do you want to maybe just give a quick biography or quick background about yourself for everyone who's here right now, and then we'll, in a couple of minutes, we'll get started with the meat of the webinar.
Sure. So I did not start as a trader, so I am a completely not a Wall Street guy. So I came from basically Main Street investing. So I learned everything on my own through bits and pieces, trial and errors. I was investing throughout, just buying stocks when I was young, and buying and selling stocks, trying to eke out a profit with 500 shares here, 500 shares there. And then one of my good friends at the time came to me and he said he needed to go to the bank because he had made a mistake and he has a margin call. I said, what did you do wrong? He didn't even know how to explain it. It was something he did with calls. I think he had shorted a call and it went against him, and he needed to bring money to cover the margin call on it. So that got me curious, and I went into delve deep into the options world, and one thing led to another. And I quickly found out a few secrets that are not so obvious and not so well hidden either, but people choose to ignore them. Hopefully we can translate some of them into plain, simple English for you today. And that's the point, doing it in plain, simple English. You can get fancy and talk like you would hear on CNBC, but it's not necessary, I promise. If you've been reading my stuff, my charts have been pretty spot on, and my comments and expectations and guesses are pretty reliable. And I don't do any of that fancy stuff. Very basic, very data-driven, fact-driven, with a few assumptions, as few assumptions as possible. And when you make an assumption, make sure it's a realistic one. So long story is, I respect Wall Street, but I think Main Street, we can do as well. And we have the tools, and we should, this is what today is all about. Share the knowledge. A few aha moments changed my life with regards to trading. And hopefully I can translate those aha moments over to members. The chat room is where it's at, not because miracles happen, because the debate goes on every day, all day. Opportunities spring out of nowhere, but that's secondary. Even though there's immediate profits in it, like on Friday, we guessed right. On Thursday, I think we guessed right. So those guesses yield immediate profits, but that's not the benefit of the chat room. It's the fact that the dialogue is open all the time. Excuse me, I'm getting over a flu, so I may have to take breaks, muting myself, trying not to gross people out. So that's me. Tell me about your level of options knowledge. So drop a 1 in the chat if you've never done options. A 2 if you've done options, but have had a lot of failures and you think you're missing a few good strategies. So 1, you've never done options. 2, you've done options, but you definitely need help. I love it. A lot of 2-ish, a few 1s. Okay. All right, so we've got 1s and 2s. That's a good mix. So what I'll do is I'll touch up on the basics of options, which would be a reminder to the number 2s as to like a reset. Like some people go into it and they start doing it and they don't have the good basics. And then you revisit the basics as a number 1, being a number 2, and you go, oh, okay, so I missed this kind of basic thing here. So, but as always, I'll start with the risk profile, but I'll wait to get the go ahead from the leaders of this meeting. What's up?
No, let's just keep it interactive right now, definitely as we have more people trickle in. But just because I kind of get a feeling, just so we know, like the end user here, Nick. So put a 1 in the chat if you only trade calls or puts. Put a 2 in the chat if you'd like to learn to trade more than calls and puts. Okay, lots of twos, lots of twos. Everybody wants to learn. Okay. Nick is the expert in spreads. So I think you guys are going to get a lot out of this, especially coming from somebody that traded before. I started the same way. And, eventually you'll find mentors like Nick that'll definitely help you out along the way, find you better ways to trade with using common sense and all that stuff. But yeah, there you go, Nick. I mean, typically it's like we do the same mistakes, right? As retail traders.
Oh,
We
yeah.
start.
We all make mistakes. I fell asleep at the wheel last couple of weeks in a couple of the trades. Luckily, they were speculative, small size, so I could afford to make the mistake. But we all make mistakes as long as they're not the modus operandi, so to speak.
Yeah.
Yep. So let's see here. While we're waiting, now that I know a little bit more about you and you know a little bit more about me, I'm going to give you my opinion of the whole market first. And then I'm going to ask you to, if we still have time to kill, I would ask you to give me a couple of tickers and then we'll jump in. So first of all, last couple of weeks, we've had selling, unusual, but not that we haven't had before. We have had selling before and they bought the dip every time. This dip has a couple of tiny changes to it. It lasted a little bit longer. It went a little deeper on the second bounce, but the clear the clear group in charge are the buyers overall. So giving back enough to go back to the breakout zone is not a big problem so far. So there's no time to panic. It's not a time to panic. And it's definitely not the top. At least there's no evidence of it yet. It's just a mini correction inside of an extremely, extremely long and strong bullish market. So from the chart itself, this is not the end of the world. In fact, I'll give you a tip here for your next week if you're not in my chat room. But if you are, then welcome or thanks for being there. This is the better tell on trader sentiment. The small caps, IWM, RUT, it's the same thing. So it's the Russell 2000. It's a basket of 2000 stocks. Now, collectively, they don't mean a lot. You can fit them all inside of one Apple. So the Apple market cap is probably bigger than all of these combined. However, they represent the market better than one giant company. So they're in the middle of the range, right in the middle of the range. So there's no panic here. There's just a long fight going on up here. So from a trading perspective, if they break out into 230, that's step one, and then a new high, step two, this is the target eyeball somewhere up here. So somebody who's looking to short doesn't know charts. This chart, regardless of what this is or when it is or anything, this is, I think, what they call a flag. You got a pole and you got a long stint of consolidation. You break either sides of these, they will overshoot in that direction. And from the weekly chart, all these long sticks show that the bulls do not want to be down here. And then a couple of times they were, and now there are more sticks coming up. So the machines are buying this zone. Therefore, that gives me the confidence that they want to break out. So give us a week of no headlines, and I think this is the easier path than this. But if you lose this, then you fall down to a second step, which also be a viable dip. So chart-wise, there's an ongoing battle over control over the next leg. It's not the top to short. So I'm looking for dips to buy. All right, give me a ticker. Oh man, you got 3 of them. Okay, I'll go with FDX, which will be a pretty interesting one. Apple, I will do next. So FDX, Apple. Okay, FDX has had a bad stint, but it had had an extremely big run. We covered it today. Let me show you. It's in here somewhere. Somewhere in here. Anyway, there it is. So what is this? This is a list of like 85 stocks that we did today in the webinars that we do for our chat room people. So I said, this was an incredible rally. Giving back about half, this is a little bit less than half, is normal price action. But it makes it hard to say, oh, this is the bottom, this is the bottom, this is the bottom. They've never been busier because of what happened over the pandemic. So it is important to realize that this is not a hardline floor, but it is too late to panic out, and it's worth a shot to go long. This is a daily chart right here. So how do I do this? So from a trading perspective, there's nothing to shoot against. See, I don't have close by levels. So I'm going on faith that this is a viable dip. So in the absence of an actual trigger, like line A is crossed, I'm going along because line B is the target. This is not the case. This is the case as, hey, the markets are going to stabilize, therefore this one should find footing. So on Monday, I would stop out if the level fails because I still have a question mark. Where is it going? I don't know. If it's a trade, if it's an investment, I'll take a little bite, leave room to add down here or up here. So that would be the way I would manage FedEx. However, I would also look at UPS because they trade in tandem. This one tells me I have something to shoot for. They just closed the gap. They have a very solid level here. So this one has reason to find footing with an actionable line. If I look left, I have a cluster, which was a fail point, and they finally served at the base. They came back and tested it for footing. Headlines aside, this is normal price action. Okay, it's extreme, but that's the behavior. You fail, you finally break out, you come back and test the failing point, which is the new breakout point for footing. Past resistance becomes forward support. That's the spirit. So now what happens after the bounce, that's a different conversation. You want to avoid this U-turn here. Okay, so I think we're good enough here. Goldman Sachs, be careful. It has to hold. Look at JP Morgan is almost broken out. Those are two tickers also from this morning's session. So let's get started. I will start by talking about risk in general, because that's the basis. We'll talk charts later if we have time, Mustafa. So the idea of risk, I'm going to ask you, and I'm going to wait a few minutes. If you were to teach me, what is risk? And I'm not using this chart. If you've seen any of my presentations, you know the answer. So I expect you to put the right stuff in there. If not, you haven't been listening. So tell me the definition of risk. I know that everybody knows what it is, but if you cannot put it in simple words in the way I like to put it, you're missing the asset of knowing that. It gives you an advantage if you can define risk the way I do. So especially in options, how much you're willing to lose. Okay, the how much part, I get it. Everybody gets that one right. Everybody's shy. Wake up.
Yeah, we'll keep you up to date on the YouTube chat too, because there's a lot of people.
All right, good. Sentiment. No. Acceptable loss. Okay, that's good. Size of risk. Same concept. So everybody's aware that, okay, risk is how much can I lose? That's the knee-jerk reaction. So I'm going to jump in here. I can tell you that the carrot is out there. So the reward is whatever it is. The parts of risk, there we go. Heather has the second part. All right, thanks, Heather. So most people say, I'm managing risk. I don't take a loss I can't afford. That's perfect starting point. How much can I lose? You talk to your spouse, you talk to your family, you establish the parameters. Okay, I'm allowed to risk X in this overall scheme of things. So you determine for that trade, I want to give it that portion of that X. So I know I'm going to risk whatever for that trade. I'm accepting the loss. So if I lose it, so be it. That should be an acceptable loss. The second part is, what are my odds of losing or winning? So how can I, what did I do to give me the edge that, hey, I have an 80% chance of success here? I do the homework, whatever here is, whatever the trade is. These are concepts. So the first one is I make the decision and I put it aside. That's done. I don't look at this anymore. That is a decision, and it's a parameter that got me into here. Now, this is the part I manage. The percentage, my success outcome changes with price action, with time, especially with options. Time is important. So, but luckily with options, that percent is a number I can read every day, every minute. So I don't have to guess. As long as I have a system that says, if this percentage drops below a certain level, I've lost my edge. I should consider getting out. That's the way that's the advantage that people don't pay attention to. If you break down the definition of risk with these two pieces using options, you have an advantage just because you immediately have a system. I establish how much I want to lose, I set it, and then I trade my success ratio. If I don't do this, I'm winging it. How the hell do I know when to exit or when to get in? So I'm winging it. That's what most retail people do out there. And if you're really lucky, you can make money, but nobody's that lucky all the time. So what do? I set risk that has 85% chance of success or better all the time. And that's the delivery of success ratio. Most of my trades, so not to say almost all of my trades, if I stick to those parameters, are winners. And the only time I'm losing, only one scenario will blow me out. And I'll share a little bit of that later. But you have to be conscious of the definition of risk. So I have an acronym that's kind of funny, but it's sticking. So I'm going to stick with it. NTNT. If you put that also on a sticky note on your monitor and don't break it, you will never take a trade on a whim. So no trigger, no trade. Now this T can also stand for thesis. So, and by the way, I think the stock is going to go up is not a thesis. I think the stock is going to go up because insert thesis here. So you have to know a reason, technical or fundamental or a tip, something that gives you the edge, and you can risk money on that. So then you know what to do when things change on that T. So the trigger on the chart, if the price goes above here, I know there's going to be buyers. Okay. No trigger, no trade. So it gets to here. It doesn't beat here. I don't trade. It beats here and comes back and find it for footing. Now I can trade it. I have a trigger. Now, a different thing is if it's here, I can say, okay, I did some homework and this company, whatever this is, I forgot the UPS, they're going to come out with some new technology for driving, blah, blah, blah. And I think they're going to blow through 200 in the next 2 weeks. I can take a trade based on that thesis. And then suddenly I see the price moves towards that. I get excited and then it falls back to here and then it deteriorates. And at some point I get stopped out based on several different parameters. Number one, if my thesis is broken, I should get out regardless of losses, wins, or whatever, regardless. If my thesis is gone, I should get out. If I hit my stop loss level, I should get out. So I'm sharing with you top line mistakes that separates the pros from the average, from everybody else. Because to me, a pro is not somebody who's like technically a professional trader, somebody who has pro habits. Habit number one, you have to have this piece. Habit number two, you don't take trades without risk, without an actual reason. Picture this in your mind. Money managers. Have you seen Billions? Money managers are assigned a basket of money. Hey, here's $3 million. You're allowed to play in this sector with these tickers. So they have to justify that to their boss. I can imagine they have a weekly meeting. Hey, what trades did you take and why? If they can't say why, they're fired on the spot. If you're just they have to have a reason, either a trigger, a thesis, or a secret tip somewhere. So if you don't have a reason to take a trade, you're not a pro. A pro meaning somebody with a pro habit. Now, stop loss is the other piece that people don't realize. And the stop loss, I shouldn't say stop loss, a stop, because it could be for a profit too. Like if this breakout happened and I say I'm out at 204 because I don't want to risk anything up here. So that's a stop profit. So trailing stop or whatever you want to call it. Or a stop loss if things go bad. At what point do I cry uncle? So it doesn't matter what kind of trading, how fast I'm trading, if I'm long-term trader or short-term trader. I'm a slowpoke. I'm busy throughout the day. I prefer setting long-term boring trades. So if you're asking about time frame, these concepts I'm saying apply to any time frame. Somebody who's trading once a week, somebody who's trading once a minute. So if I'm a fast trader, the same concept apply here. So I see a chart approaching a prior failing point. I short it with a stop loss. So the stop loss could be, okay, I'm only taking 5% loss and then I'm out if I'm wrong. Or if it breaks out of 184, that means my thesis was wrong. They overcame the resistance, then I'm out. That's a short-term comment. If somebody's looking at this on a weekly basis, they can follow the same comments, but on a slower time frame. But the process is the same. Look here, look left. You think that's a coincidence that it's to the penny from September of last year? It's not a coincidence. Okay, machines remember levels. So if my thesis was, hey, we're falling into a pivot point from last year, I want to get long here, then that's a thesis. There's no trigger. There's a long thesis. It's going to find support. This candle might be my stop loss if it loses 174, because I don't know where they're going, that type of thing. But it's all the same. You have a thesis, you allocate money, you're willing to risk, you put that aside, and then you look at your percentage. If the trade I took today had an 85% chance, what is it tomorrow? What is it the day after? If it falls down to 70%, is that good enough for me? In my book, no. Were you saying 70% is pretty high? 50% is a coin flip. So to me, 70% is 20 points off of a gamble. So you're losing the edge. Sounds high, but it's not really high, because 50% is zero. You don't have any edge at 50%. You're just hoping. You're facing somebody, you're punching each other to see who passes out first. That's not a contest I'd like to do. I'd rather know that I can slip and punch back. So now you know what I do for a sport. So you have to give yourself an edge. NTNT is a must. Taking trades because it feels good, or you see big red ticks, you get that FOMO kicking in, is full of potential mistakes, because I don't know why I'm taking the trade. I get questions, hundreds of questions a week from the chat room. Let's say somebody pops into the chat room and say, hey, you know what? I'm in trouble with this trade. What do you think I should do? My first question is, and it sounds rude, but it's not. I'm actually inquisitive about it. Why did you take the trade? So I know what was their thesis. Some people take it, what? Hey, why are you insulting me? I'm not insulting you. I'm just asking so I know how to answer this. They say, I don't know. I thought it was going to go up. So that tells me right then and there, they did not have a reason to take the trade. They just liked the stock and they took the trade on a whim. Whether a tick forced them to take the trade, like a red tick forced them to get out of a trade. So let's go to a daily chart. I say, don't watch ticks, watch levels. So when you see a red tick, the FOMO, opposite of FOMO, kicks in and you tend to capitulate. So somebody that panic sold here is not looking at the fact that they just closed the gap, and that's a base. If you haven't panicked all the way to here, and this is where you panic, you fell victim to FOMO, the opposite of FOMO. So this is what keeps us alive in the wild, humans. When you see a whole bunch of people doing one thing, the instinct is to do the same thing. If they're running out of a forest, you want to run with them, avoiding whatever they're running from. You don't say instinctively, ooh, let me run it back in. But that's what you need to do in Wall Street. You need to go investigate what they're running from and see if they're potentially wrong and they're panicking. Then you take advantage of that. So luckily with the options world, we can do that. All right, so now we're speaking thesis, like top line investment theories. Did you get it? One point is you need a reason and the odds, and you track the odds. That's how you manage your risk. This is where it all starts. Why I take the trade. If I don't have that, I shouldn't take the trade at all, and this doesn't matter. Stop loss. What do I do once it hits a certain level? When do I cry uncle? When do I say, hey, stop it, I'm done? So one way is to say, if I'm down 20%, I'm out. And that 20% is different for people. Whatever the bet is, whatever the outcome is, if I'm down 20% and I'm in the trade, regardless of what this number is, I'm out. Another way of doing it, if X level fails, then I'm out. So if I'm long something and I say on the chart, this would get me out, I make these notes before I take the trade, I'm out. That's another way of doing it. And of course, if that percentage number it's become too low, so I lose my edge. If I don't know what the heck's going on anymore, I'm out. So those are acceptable stop loss level. Oh, another one here. When I say percent, some people like to do it with dollar amounts. Like if they always take a maximum risk of $1,000, they say 200 and I'm out. So some people do it in percent terms. Some people do it in dollar terms. Personal preference. Some people don't like to do it. They're okay risking it all the way. So anybody here identify with any of these? So tell me this. Who does not practice NTNT? Give me a 1. No trigger, no trade. In other words, you don't have a specific reason most of the times. Give me a 1. Don't be afraid. I know you do it. There we go. Thanks, Sean. The first. All right. So we know we do it. We're all guilty. Who doesn't practice a stop loss when you get in? 1.5. Good one, Keith. Thanks for the music. Okay. I haven't before. So put these into your repertoire of things to do. Take a screenshot of this or write it down, the parameters to get in, the NTNT, stop loss, and you've already made yourself, if you can stick yourself, make the goal to do these 3 things. You're already a head and shoulders above most of traders out there. Trust me, I speak to thousands of them over the course of 2 or 3 months. This is what needs to happen in order for you to be a pro. And I mean a pro in a sense where somebody with pro habits. These are pro habits, and some pros don't even do this. But I don't know how they can't. They don't. But because this is the only way to take emotions out, make it a methodical, make it a job that way. Not from the standpoint of quit your job to do this, but this is the behavior that makes consistent results. You exit early if you're wrong. You exit, you don't stay too long in a winning trade. You don't take a trade willy-nilly. You don't enter a trade without thinking about size of it and if you have an edge or not. Like if I don't have an edge, I don't take it. That's it. And if I do take it, I call it a lotto. I do these every once in a while, and it's usually tiny amount of money, just like a lottery ticket. Low odds, high pay. If it happens, it happens. But I don't do them often, and I don't do them in big size. So that's acceptable for fun. All right. So this is a good breaking point. Let's sit back and breathe.
And just so you know, on the YouTube, we had a bunch of ones come in, and surprisingly, like 3, 4, 1.5. So Gustavo,
1.5 means
Tom, and Rebecca, we feel your half. So
yeah, 1.5. I mean, I like it. That's an honest response that thought about it. They know they were breaking the rules, but this is the good time to really be honest with yourself. And this is really what adds to the success over time. You can't just wing it. Some people are lucky. I'm not that lucky. All right. So, and let me see here. You tell me, you as in moderators, what is a breaking point and how much time can I step into options right now?
I mean, we've been talking about options all this time.
Okay.
Right.
So, right. No, we were talking about investment that applies very well in options. But that was the basic building blocks that apply to any style. Now, this is an options table. This is an E-Trade practice platform that I have. I'm not recommending it. It's fairly simple to learn, but it's got a lot of bugs, but I bet you all of them do. And when what hits the fan on like crash days and whatever, they all lock up. So don't look for a perfect platform. You won't find it. There isn't one. This one has crappy charts. I can tell you that. but it is fairly simple to use to learn options and construct options. So I will use this today for my demonstration. And let's talk options. Since there were some ones, meaning they haven't dealt with options before, I will quickly skim over my definition of the options. Now, the options world is very particular with its languages. They love to use Greek. So they use theta, vega, gamma, delta. I'm going to dumb it down, and only two of them really matter to most people. Okay, so that's why we have winning trades in the chat room. So all the trades I set in the chat room and for the members of the options newsletters, I usually provide it the setup with like a 15-minute video, 12 to 18-minute videos from start to finish, including this page right here. And I share my theoretical odds of success. And the trades that I use, we usually say they're the most conservative version of it. Usually every trade has 4 different ways of going long, if we're going long. The ones I choose for me have an 85 to 95% odds of success, and that's what they deliver in the write-ups. Now, if somebody buys calls or call spreads, most of the trades also have immediate profits or profits at some point. But if you sit in the winnings until you see it come to fruition, like to get maximum gains out of it, I can guarantee you that most of them will end in tears. So if you don't book profits, you're gambling, and that's not proper risk management. So as important as it is to take the trade at a good time, it's also important to actually know when to get out. Like, for example, perfect example, let me see here. Ticker UPST. And let me show you the drawings and you'll see. Went long somewhere down here. These were my actual notes from the video. So breakout line, stop out if things go sour. And this was the credit put spread or sold put I wanted to get that I would have done. And this is the call spread that somebody else would have chose to buy. So I could go long the stock by selling risk below or buying risk above. And either way, they're both winners, right? Somewhere up here, can you believe it, that there's some people still asking me if it's okay to book it? So I don't mean to make fun of or light of their opinion, because maybe it's inexperience or whatever, but I can tell you that mine, I booked it like here somewhere. So I definitely do not sit there and wait for this outcome. This is a rare outcome, although it is one that we triggered a while back. So let's see who fell recently. Facebook recently fell on headline. Every time they spit it out on headline and opinions and fears based on the US opinions, it's a buying opportunity. And I shared it, and the next 2 days it went up. So that was a scalp opportunity. So somebody that sat in those, maybe they won't get benefit out of it if they just looked at the profits and said, cool, let's ride it for more. So I like to book 12 to 25%. There's no shame of booking 10% and making sure almost every trade has that much at some point. I log them and just so I can be held accountable. Let me give you an idea. Zoom, hold on, 913. Let me see if I can bring in the picture of this will serve as a good example as to how to deploy risk. Oh, this is a good page. I should have saved it. Anyway, where is it? There we go. Hold on. Bear with me. I'm taking a snapshot from somewhere else. Okay, perfect. I grabbed two or three other things in there. So this is an Excel spreadsheet. This is my live Excel spreadsheet, my log for one of the groups that receives options trades from me. Let me walk you through all of this junk and explain it to you. This is a lesson about options. These things here are options, these things in whatever ticker we are. Where we go? There we go. So on 913 Zoom trade, video went out. I think it had fallen on something. I can't remember what. And I said, okay, I'm going long. I had a video. I don't remember the wording, but I said several ways of going long this thing. So you take the bet and you see if it plays out. And if it doesn't, you have to stop out at some point. So buying upside or selling downside risk. The opportunity for the upside comes and goes pretty quickly. That's why I usually say fast setup, not for me. A slower setup is still not my, I bet you anything I said that in the video that I don't like it. Selling puts or selling put spreads would be the way for me to do it. And this would mean that as long as price is above 230 and 240, I'm going to win anyway. So it comes under fire. All I need is for Zoom not to fall below these two levels, and I win. So that's the kind of risk I like to take. So these two had delivered profits, even though the pop didn't last. So whereas these have deflated. So somebody that paid $1,600 that day is now down only $450. Okay, somebody that paid $400 almost is now down to $150. So they have a lot of losses, but they had opportunities like 4 or 5 days to get out evenish. I have a log of it. It's somewhere here. So, and these two had delivered, this one delivered small profits. What I'm saying is how you take the risk matters in options. I always default to these two things, selling versus buying. So in options, what do they tell you? Most options die worthless, right? So why would you want to be buying them? You'd want to be selling them. That's why I always default knee-jerk reaction. I like to sell things because if most of them expire worthless, why am I the buyer? Hell, I'll sell them all day long. So I break my rules because sometimes I see a trigger. So I share the long SPY. Sentiment was falling. I don't remember. That was the whole market. At the time, the cost was $435 per contract. Now it's $400, but it was $700 on September 23rd. So 3 days later, it's almost double. Well, it's 40% more or so. I also offered it in the version of QQQ, which is the NASDAQ. It was $440 expense to get into the trade. Now it's $240, but it was almost $7 and on 923. So the point is, if you don't know when to book profits, if you can't book a double, it's your own fault to learn from it. Because in this environment, heck, I don't trust myself that I can get more than a double on every at bat. So if you sit on it, you're going to end up exposing yourself to disappointments. You do the right thing, you don't do the right thing by getting out. So set a parameter. What I said is stop loss, but I took the loss word out. You have to stop out at an acceptable win and at an acceptable loss. So this one gave me the chance to get out at an acceptable loss, even sometimes green, all 4 of those. And if I didn't take it, then I made a mistake and now I'm invested. It's okay for these two. It's not so okay for these. These two need help from the market themselves. So let me see if I can find, as we're talking, I'll find more examples that are more hard, clear-cut wins and losses. So Penn, we took a trade on 9/7. Let me see, and it immediately played out well. And whoa, nice day here. So let me see. On 9/7, we took a trade, debit call spread through credit put spread and sold puts, and all of which delivered profits. Like and I'm going to say about 25 to 35% depends on what kind of trade you took. But if you sat on it, suddenly somebody who just bought naked calls now is red, even though they had a clear win, 28% air math. Somebody who sold a put is still green. Somebody who sold the put spread is evenish, and that's working. So let's go why I like the selling. Let's go through why I like selling. By the way, while I have you here, if Penn goes above 86, do not short it. Okay, it can go up to here. So why do I like the selling part, because let's use pen for an example. I can buy a call, or I can sell a put, and I'll go through what that means. So if I buy a call in options, it means that I'm bullish, because the only way I can make money is for pen to rally. That's the only way the call will improve in value. Or like buying shares. The only way you can profit is for price to rally. Now, the difference between buying shares and buying calls is that buying shares, I can sit on it forever. Buying calls, I can't. It has a time. So I have to be able to justify myself sitting and waiting while the value of my call depletes. Why does it deplete? Because it's a contract and time is running out on the contract. So if I want to sell the contract out to somebody else, they're not going to pay the same I paid, because I had 30 extra days or whatever. And now there's 30 days less, fewer days. I'm just making that as an example. So buying a call or a call spread requires a move, and it's time sensitive because it's got a limit. It ends, it expires. So selling a put or a put spread, put spread means when I open the trade, money does not leave my account. In fact, I get a credit into my account. That's why it's called a credit put spread. Some people like to call it bull put spread. I like to leave the word credit in there, because it reminds me that there's no money out of pocket. I open risk in case the price collapses. So let's see. If I buy shares, buy calls, or buy call spread, I need a rally to win, and that's the only way I can win. If I sell a put or put spread, if the stock rallies, I win. If the stock doesn't rally, I win. If the stock falls a little bit, I win. The only way I lose if the stock does this and falls through both legs. So that's only one scenario. So kind of like to say, what is easier? To pick a stock end point, like where is it going, the one spot where it's going, or all the other spots where it's not going, and sell risk there. That's what I like to do. That's why I prefer selling risk to buying risk. It's an easier task to guess where it's not going to go. Let me put it into a ridiculous term. So let's pick a stock. Apple is good enough. January, December. So you notice how there are contracts up there, expiration dates. This one, if I pick December, has 75 days on the clock. I'm gonna go January, nice clean year. So let's chart Apple and have a visual 2 levels. 120 is down here. That is 15% below Friday's close. So how can I put the selling puts example? What does it mean and all of that? So somebody owns stock in Apple. And by the way, a put or a call is not by itself bearish or bullish. People say puts are bearish. No, they are not. Calls are bullish. No, they're not. They can be bearish. They can be bullish. Depends. Every transaction has 2 sides. There's a buyer and there is a seller. So somebody's selling a put, somebody's buying that same put on the other end. It doesn't go from a shelf and to a shelf. So how could it be bearish or bullish? It depends on what somebody's trying to do with it. So if I'm owned, the idea of having a put to buy is to, for me, buy protection from my stock. That's the concept of having a put. Why would I want to buy a put? It's to protect shares. Some people buy puts to short a stock. That's one way to actually bet on negative price action from Apple without being exposed to shorting a stock like in the traditional ways, which has unlimited risk. In this way, they spend $300, $400. They're shorting the stock for 110 days. What does that mean? If price falls, the price of that put expands in value. It becomes more expensive. Look, they're more expensive the higher they are in the money. This is current price right here. So if they buy it, they spend $380 per contract. So if price falls, then that 380 could turn into 500, 700, 900, 1200, 1600. Depends on how far Apple falls. The further it falls, the more expensive that put they bought becomes. So they don't even have to own shares. They don't even have to buy shares. All they have to do is turn around and sell that put they bought at the higher price. The difference is their profit. So that is how they, quote, trade puts without having to or needing to own shares. So you don't have to own shares in order to buy a put. So why would anybody sell a put? Hey, so let's put an example to it. If I owned shares in Apple, if somebody owned shares in Apple and they wanted to protect themselves, they'd go out and buy a put at 120. Why 120? I don't know. It suits their, they bought it at 80. They're willing to lose back down to 120, but not more. So they're locking the profits at 120. Well, that policy is going to cost them $220 for their 100 shares. Look, there are 50,000 of them here. So they can buy it. So they need a seller. So who the hell wants to sell them insurance on a stock? Well, if I did my homework and I'm confident of this level, you know what? Heck, Bob, I'll buy your shares at 120 in the next 80 days. I'm in. Give me the 120. So I'll be the seller. See, red. Bob will be the buyer. He wants to protect his shares. I'd be the seller. I'll take his shares. So he's in control. When I take this order, no money leaves my account. $220 goes into my account. And now I have to perform what? Nothing. I have to sit back and wait for Bob to give me his share at 120 in the next 110 days. So in the next 110 days, at any point in time, I could wake up one day owning 100 shares of Apple. So that's the worst case scenario. And the worst case, the better news is that my break-even point is a little bit lower. By how much? By about the amount I collected. So in this case, I'm going to round. If I collected only $2, my break-even point is 118. So the worst case scenario, Apple stock falls. I wake up one day, I have shares. This position here, which would have accumulated a lot of paper losses. On paper, it would be tremendously losing, but I don't care because I intend to take the shares. So I don't bother defending it. I don't bother, quote, rolling it or anything. I'll just look at it. Okay, my account is red, big deal. I'll take the shares. So the minute they give me the shares, I wake up on Monday and I have shares in my account. That position with all its losses, the put disappears. Takes all the losses with it. I keep the $200 I collected. So I wake up owning shares. And if the stock is between 120 and 118, I can sell it and I made money because I collected $2. So that's my break-even point is 118. What if it pops on Monday? And trust me when I tell you, it happens. Then I sell it. So somebody may be in here actually. He's in the chat room. His name is Dave. I outed him, Dave. Anyway, so months and months ago, he sold puts in Boeing. And on Friday, the stock, when the puts were about to expire, the stock closed like a penny within the price of the put. He woke up on Monday owning shares because it was a red day for Boeing. So he kept his premium. And then the stock had opened up 11% that day because of news of something about the 737 taking flight, test flight that was positive or whatever. So the person that gave him the shares, excuse me, sorry about that, made many mistakes and had the bad luck of missing out on the 11% pop. So it's not the end of the world to get put. Not all stories end this well, but it's not the end of the world. And sometimes they don't assign you shares.
Hey, Nick, really quick, sorry to interrupt here, man. We just have a couple of questions here about the chat room earlier over on the YouTube side. Don't want you guys to feel definitely, so yeah, just before we do continue here with the education, just want to clarify because we're getting some questions here. The Inner Circle chat room with Nic Chahine, that is what we're doing here a little bit. This is like a sneak peek, but we pretty much do this every day. In the options Inner Circle chat room, that's where you can see the screen where basically Nick is going over there, the chat. So basically you have a full plan for options trading. You have direct access to Nic Chahine. You have direct access to trade feedback to other options traders. This is probably the largest I guess, pool of educated options traders that I've seen. Just because we are looking for consistency, we're looking for long-term account growth, not really for these lottery tickets. But the link, we're going to post it in the chat. We want to continue with the education here for a bit. So we'll go in there with the chat, with the education right now. And then if we do have time, we'll go over Nic's chat room later on.
So these images from Friday, I had a couple of good calls on what to do with the trading day, which brings me to a second important point. Remember the 3 rules I gave you for the pro behaviors? There are similar things that you do every day. So every day I start the morning with a plan. I'm trying to find one from one day. So I say, okay, here's what I expect today. And I give all the charts on the indices saying these lines will matter. Going into Friday, I expected a dip because of what I saw in the overnight session. I said, I expect a dip in the SPY. I will buy the dip. And here's how I would buy it. So it yielded a lot of profits pretty quickly. So people were saying, ooh, they're rolling because they took the bet. And somebody bought something for $2 and sold it for 25, an SPX call. If you don't know options, that's like a mortgage payment for about 6 months if they did it in size. So I'm not saying that's what happens every day, but those opportunities are in the chat room. That's not my goal, but if I see it, I share it and I disclose it as such. And that's the same somebody, I think. But anyway, so, and I also share like Iron Condor videos for a whole week. And believe it or not, last week, the Iron Condors came under fire. What they are is self-hedged, fast trades intra-week that delivered a lot of profits. And I share levels and I share videos throughout. So there's a lot of benefit to be part of a group. So here's my advice. I don't want to call it advice. My observation. I will never go back to trading alone. Trading in a group makes you a better trader because when you know you're going to be sharing information with other people, that holds you accountable. You are quick to forgive yourself mistakes. I'll do better next time. But if you know your comments are might be hurting somebody else, you then, make sure that your T is there, your thesis or your trigger is solid because you have to be accountable to people. And that goes because they offer ideas too in a chat room. Imagine this, hundreds of people in a chat room. So if each had 10 tickers, the watch list is massive. That's another advantage of trading in a group. I mean, I have my watch list. If I had my go, I would only have like 14 stocks in, but it's 1,000 stocks now probably because of all of yours. So trade in a group makes me a better trader. And I think you should consider it. If not this group, some other group, but hopefully this group, we'd love to have you there. Basic question, why could you explain in simple words, perhaps an example, what strike price, ask, bid, when's profit, haven't traded options. Okay, I think you're asking about how to read the table a little bit. So let's spend a minute. And I'll tell you to whittle down the noise. In the options world, it's very noisy. So let me finish up here the concept or wrap it up to fold into the question that just came in. This is what it means to sell a put. I'm committing to somebody that I will buy their shares. So I'm bullish. If I didn't like the company, I wouldn't sell that put. They're bullish. If they hated the company, they would sell their shares. They wouldn't buy insurance on their shares. If you hate your car, you're not going to insure it. You're going to sell it. So if they're really bearish Apple, so put action is not necessarily bearish. In fact, I don't want to say it. So it's just listen to what I just said. Don't fall victim to unusual options activity. If you're not the one finding that unusual options activity, if you're hearing about it or reading about it, you're too late. You're actually buying somebody else's profits, most likely. Besides, when they say most options expire worthless, the ones they point out are the biggest. Wouldn't that be the one that expires worthless? So it doesn't make sense. All right, so let me clarify some of the stuff here. I don't have many columns in my options table on purpose. You don't see bid and ask. Somebody just asked about bid and ask. I don't care. Mark is what I care about. The mark is also the mid, sometimes it's called the mid, which is the middle between bid and ask. So if I pull this up and I say trade it, bid and ask, somewhere in the middle lies the truth. Liquid companies, liquid tickers, it's always going to be the mark plus or minus a penny or two. So why would I want to see bid and ask? Personally, that's not part of my formula. I have mark. That's all I care about. What's the price right now? Don't care about last. That means nothing. That means less than nothing. Mark, middle between bid and ask. Mark change is what happened that day. Okay. Now the open interest. Open interest is the positions that were open at the beginning of the day. This is a static number. They're on both sides. And it does not move. So on Friday, when we opened the morning, these were zeros, volume, and these were these. Now, on Monday, we will open. These would have changed based on what happened here, and these will restart at zeros. So volume is the action throughout the day. Volume is the action throughout the day. Monday, these will reset with these changes, and they will stay static all day. Tuesday, they will reset with the Tuesday volume, and these will reset to zero. So that's the difference between these two. Now, implied volatility is an important metric because it's basically, you've heard about the VIX, the fear factor. This is how nervous are people about this set of options. And that changes from week to week to week. So if I show you the constellation, where is it? There we go. It varies based on weeks. If somebody had if Apple had an earnings report here, this number would be up here. So it'd be unusually high just for the earnings report. So if I'm buying things and this is really high, I'm overpaying. So I should be cognizant of that. There is like a whole world of trades based around selling weeks that have big values and buying weeks that don't. So that's a whole different conversation. But be aware, if this is unusually high, then you're overpaying. So even if you guess correctly, if the VIX drops, you're going to lose money just from that fact alone, even if you get the proper move in your favor. Okay, now I've kept the most important for last. Can anybody tell me what's the most important metric on here? I'll give you a minute so I can drink something so I don't cough. You're going to have to use a Greek word here. Bam! Yes. Sharon. That's it. Keith, good job. Okay. Georgia. Okay, so delta. Why is it important? All right. I told you Greek. I don't care. I told you what was the one thing I wanted in my risk thing. I want, give me a word. Yes. No, I don't know what he said it. I don't know if on YouTube. Edge, right? I want edge. I want money. Yeah. I want edge. This is edge right here. This is where I determine my edge. What does that mean? Current price is 142 and change. So current price is somewhere in the middle. So anything around here should have a delta of 0.5. Look, 0.5-ish, which means I don't have edge. 50-50. When you buy a stock, it can go up, it could go down. 50-50. There's no edge. The only edge you can afford yourself is by doing homework and having be smarter than the blah, blah, blah. But that's not real tangible edge. In options, you have a tangible edge because the further lower I go, the less likely it's going to happen. The further higher I go, the less likely it's going to happen. So let's put it into plain, simple English. If somebody buys the 185 call, they're dreaming based on these odds. The odds makers say that you have maybe a 4% chance of getting hit here, of actually Apple being here in 110 days. Just like this is high, this is low based on the low delta. So use this as your odds maker. If I'm a buyer, I don't want to be too high, then I'm dreaming. I don't want to be too high in altitude. Like I don't want to be too low at delta because I'm just smoking hopium, as they say. if I buy it here, I'm 50-50. If I get the direction right, I'm profiting already right away. If I buy it here-ish, now I'm a good blend of, okay, it's not there yet, but it's still feasible. So there's a good balance that people find. Mine is about 33. So 0.33, so 0.8 to 0.35 is a good sweet spot that I found works for me with about 2 months on the clock. What does that mean? So if I'm buying calls in Apple, I wouldn't buy January, I wouldn't buy October, I'd probably maybe November or December. So let's go to November. I would buy something with a low enough delta that gives me like 150. I wouldn't go higher than 150, like lower in delta. That just becomes too much of a gamble. That is, so I would buy something here if I'm buying. So if I'm selling, I want to sell the heck down because I want no reason to have to sweat it. So if we go back to January, for example, this would be the one I'd sell. Let them fight it out. Let them crash it down to 120, and I still wouldn't lose money. That's the kind of trades I personally like. And this one has an 85% theoretical chance of success. And guess what, folks? If you take trades like this all the time, selling a risk at a 15 delta-ish or lower, it plays out that way. Yes, you will have a loser or two, but if you provide balance in your portfolio, it's an easy way to deliver consistent results over time. And that's my goal. Every trade I share has that setup that way. So I don't need a rally to win. I don't need much. All I need is nothing to happen. I want no crashes overall in the markets. I want no single crash because that's the only scenario that could make it difficult for me to manage my risk. So the difference between biting your nails, is it rallying or is it not? Or call me when something happens. That's the attitude. So I like the call me when something happens step of a trade. It's boring, but it delivers 15% to 20% yield on risk. It's like having a list of stocks that say there's an 85% chance that this stock will rally 15% in the next 2 months. Not many can say that. I mean, they can move that much, but you can't say it with that kind of certainty. Can you tell me that any of your stocks have an 85% chance of success of rallying 15% in the next month or 2 or 3? Not many people can say it with backup. So selling puts and put spreads can deliver that with mathematical certainty. So a market crash, of course, puts everything out the window, but this is where you keep balance in your portfolio. So this is a quick lesson of what I like to do and how I can keep my odds of success high. These opportunities are shared with the group and they deliver the same stats. And they're consistent and they should be boring. I say it's a boring setup, meaning it's designed to be boring and only a like Peloton crash headline of, unfortunately death that, you can't plan for that, but you can avoid some stocks that could be prone to it. Like what? Like the IBD, Moderna, great company, great P&L now, but boy, selling puts and put spreads, you better have a strong stomach, just like buying calls or call spreads, because it moves fast and it's unpredictable. Every day could be like an earnings day. Like who knew Merck was going to come out with a pill, right? Or news of a pill. So my chart played out perfectly. So somebody that had received my chart would have said, you know what? We already lost the footing and this is about the target. And Nic said there's buyers here, not because Nic is a genius, because that's where they were. So I'm just merely pointing out where the buyers were. Although it's not a solid footing floor, but it is not a place I would panic out. In fact, I would be brave enough to try to catch the falling knife. Somebody that did that in the morning, they made money. I think it was down a lot more, according to this candle. So Moderna would not be a great candidate to sell puts in unless you want to own shares because it's headline riddled. So the whole IBB, XBI, biotech have headlines that come out of nowhere. Nic is a genius. No, he's not. He's very humble. So in the sense where I know I'm not an expert in Wall Street, so I have to be super. I do this like I play pool. I'm pretty good at pool, not because I'm a good pool player. I play like a child. I measure every shot. So because I stick to my basics and I stick to my rules, you become successful. So Wall Street is tricky. They cheat. The people on Wall Street cheat. They rig the game. They make the rules. They can bend them any which way they want. So if you think like them, then you know what they do. So for example, here, what do market makers do? I'm going to give you a tip. It's like an aha moment for me. Market makers sell stuff. They make markets. There is no market if no one sells anything, right? That's what market maker means. It means you have enough money to take the risk and make the market happen. I'm going to sell stuff. Who's buying? So people buy this, calls and puts. So the only way the market maker loses is if the price action goes above and beyond, up or down, doesn't matter, their expected range. So in this case, the expected range is about $16, up or down. So if I sell risk outside of $16 up or down, I have the odds on my favor. It's like going to the casino and saying, hey, house, I'm going to play with you. So take my little money and go bet against the people that are gambling here on my behalf. That's what I'm doing. So if I sell an iron condor, $16 outside of this range, I should be okay. So let me put a visual to it. So, and it will define what an iron condor is. So let me step back. So I said I can sell a put in Apple to be bullish Apple, right? I'm saying, okay, I'll buy your shares at 125. That means, hey, I want to buy shares. That's the bullish bet. It needs price to not fall through that. Then I lose money, $3 below. If I wanted to limit my losses, I would do a credit put spread. It's also called a bull put spread. In this case, it looks like this. I sell one and then I buy one to limit my losses. I'm on the hook for somebody. I'm off the hook for from somebody. So the price can go to zero. I can lose X. I know my X amount. So that's called a credit put spread. That's a bullish bet. Does not need a rally, just like sold put. I just need price to stay at or above that price. So a bearish bet would be to do the opposite on the call side. First of all, let me throw this tip. I would never, ever sell a naked call, ever, 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 ever. I forbid you from doing that. You saw what happened to GME. You saw what happened in Tilray in 2018, I think. If you were short either of those two stocks, you went bankrupt. Bankrupt. So not for me. Unlimited losses is not for me. Okay, so the idea is I can do the opposite up here. So this is not a trade to go out and take right now because it doesn't fit right. So let me make it more even that way. They have these funny, it's split, right? Yeah, that's why they have these funny puts here. So this trade takes a risk here and takes a risk here. The red means I'm selling that leg. I'm selling this call, I'm buying this call, I'm selling this put, I'm buying this put. This is an iron condor. What does this trade need to win? It needs Apple to stay between 165 and 125 in the next 110 days. So I wanted to do nothing and ping pong inside these two ranges. So let's put those on the chart to see visually where they are. I'll take my drawings out. So 125 is down here and 165 is off the screen up here. So pretty wide range. That's how I win. I just need Apple to stay inside this wide range. This is called an iron condor. So I collect 50 cents down here. I collect 50 cents down here, up here. So if I do one contract, I collect $100 today, and my maximum loss is $400. You're saying, whoa, what? Well, that's 25% yield with 85% chance of success-ish, give or take, because it can lose up or down now. But each one is properly set enough, far enough, that it is likely to succeed on its own. Okay, so this is a quick lesson on the benefit of iron condor. It's a balanced trade. On a bad day, this one wins, this one loses. On a good day, this one wins, this one loses. So I can withstand whipsaw action. And this also shows how risk is controlled, and how I have actual tangible numbers I can use to deploy risk and manage risk. So if price falls and the delta on this one becomes too high, that means my odds are close to 50-50 now, down from 80 or 85. Then I decide, you know what, I don't like this trade. I can take it off the table. All right, 1 second. Cough coming. Whew. Sorry about that. All right, so we're going to tee up some tickers to see if we can answer some questions on the fly. So give me another ticker. Maybe that'll open up. Oh, Goldman Sachs. Okay. I saw this earlier. Somebody's jumping in. You know your charts. You're worried. So Goldman Sachs came up with the discussion this morning with the team. 2-hour call, by the way. So I put an orange line. First of all, this is JP Morgan. All-time high. Get ready to go. Where's Bank of America? Yeah. What is happening here? So I shorted Goldman Sachs several times this year, not lately, and I won. The last time I shorted it was difficult, but I finally eked out a profit. So they're rallying. Banks are rallying with the yields. With the TLT falling, yields means they're spiking. So the machines buy banks. This one is not being bought. So this one is not a bank. They're trying to be more retail, but it means that they are they have shenanigans going on. They always have side deals and this and that. So I don't know the news on it. It's a solid company. It's got a good solid P&L, but I can tell you technically it better not lose this orange line, because if it does, technically it's like I call it a ladybug. It looks like a upside down cup and a handle. Basically a lost neckline carries lower prices, and usually by as much as the depth of this cup. So this should be tested. This should be the target down here, eyeball. How big is this? So from 372 to 418, that's how much it should fall. So the good news is it has this candle. That's pretty good. So I would start looking at it here with my alerts. I'm doing homework. This candle is important. That's also a buyable spot. Whoops. I hate doing that. Buyable spot. And most definitely down here, I would buy the dip if I'm not long. So why here? So that orange line is the busiest spot for this whole period of time. How do I know that? It's an automatic line that draws itself from this study right here, which is the only study on my chart, volume profile. So this literally tells me where they love to trade it the most. These bars down here are volume. This bar right here is time. When did they happen? Who cares? This one tells me at what level they happened. So this line is the busiest. But here's the critical point. This is the second busiest line. So I expect there should be buyers here. So this is a buyable dip with a tight stop. This is a perfect example to circle back to the risk I talked to earlier. How do I establish a tight stop? If it loses this level, I'm out and I'll try later. If it's a trade, that's one way to put a tight stop. Or if it loses 20% or 10%, whatever my line is, that's a tight stop. So this is a visual example of how to trade Goldman Sachs. So if I'm long, too late to get out. If I want to get long, I can, but I should stop out if it's a trade. There we go. That was Goldman Sachs.
Hey, sorry to get in here, Nick, but we are getting a couple questions here again about the chat room, Trading Fanatic there. So just want to give you guys a quick recap here about the Options Inner Circle chat room with Nick. Basically, it's a 24/7 options trading live chat room where you can not only ask for feedback on your trades to Nick and get the feedback from Nick, but you can also look at Nick's trades, not just weekly trades, but somewhat more longer trades. You get full research on the trades that Nick is doing, daily updates every morning. I think it's like at 7:30, 8:30 a.m. Nick is already going to have every single trade all the indexes already mapped out with important levels to look for, what not to look for, and adjusting the strategy. So we're also meeting on Sundays. Actually, Nick came from the chat member session when he decided to join this workshop today. So every Sunday we have a chat session only for chat members. And we basically meet, we talk about option trades that we have in the portfolio, how we can make adjustments for that. Obviously, Nic is, he's doing research on all this stuff. Personally, I traded options. I trade options right now. And I've learned a lot from Nic Chahine, not just as far as like using the options, the logistical part of it, but also as well, reading the markets, the sentiment. I know that Nic has had about 3-4 contrarian trades where basically the whole world was against the trade and we ended up being right in the chat room. So Nic does his own research. We're really not a big on following the crowd per se, the crowded trades and that. And on top of that, Nic is going to be giving you picks as well, or opportunities that could come from his research. And that's something that happens every day on the weekends as well. People are there. As you can see, we meet on the weekends. And this is not even the chat member session. The chat member session is just Nic with the members there. But if you guys have not really traded around a community, that might be one of the problems why you guys are like, vacuum trading per se, where you're really trying to figure it out. You're trying to wing it. I tried that. It didn't work. You might get some lucky winners, but for the most part, we do want consistent long-term account growth. There's a lot of serious people here, whether it's a single mom or an entrepreneur or an executive, they want to make real income. They're not trying to gamble their savings away. And that's not what we're here doing. We're here trying to find logical, reasonable trades with high percentage of success. And Nic has been doing this for about 2 decades. He's written books on this, and it's something very good because for options traders, there's a lot of misinformation out there. There's a lot of people in YouTube, these little kids that just want views that are going to just lure you in, right? So you'll always see them doing videos about AMC calls. You can look at, that's the most searched thing on YouTube. So what do? They do videos on AMC. Right. So we're not here to do that kind of work, to be honest. Really, what we're looking for is long-term account growth. Can you make some swings here and there? Yes, but that's really minimal to what we're doing. We're looking for common sense trades. And everybody that's in the chat room, I see a lot of people here that I recognize on the YouTube chat as well, and on the Zoom, because we have it on 2 different places. Zoom is like 15 seconds behind, I think. YouTube is like 15 seconds behind, but a lot of people here that I recognize that I know they've been improving their options trade. They've told me about their progress, how they've improved. And, it's really good to see that, because that happened to me as well. I was just doing calls and puts, and eventually you figure it out that there are safer ways.
Can I interject here by restricting it to an options conversation? So many people in the chat room are strictly not options traders. I think there are a few futures traders and a few just equity traders that want to learn more about options. So here's the way I look at this. An opportunity to be in a two-way conversation with a group of people that are trading is invaluable to me. I mean, you can put a dollar amount on it, but whatever it is, this setup did not exist a few years ago. I wish it had. So for example, if you have an idea or a ticker, and wouldn't it be great to run it by somebody? Just throw it in. Hey, what do you think of this? I'm thinking about doing that. So you might be missing something that's really obvious for somebody else to see it. Not that somebody else is smarter than you, but just another pair of eyeballs on the opportunity might make you make fewer mistakes. Wouldn't it be lovely to take away the giant mistakes that could have been avoided? That's my opinion. It's like the cost of doing business, really, to be in a room of resources open all day. So I'm not hanging in the chat room all day. I check on it all day. I am sitting at my desk all day during business hours, but on the weekend, I'm not like sitting waiting for somebody to type something in. But I work enough to where I'm at the computer 2-3 times a day. And if I always check them. So weekend or not, you have access. And I'm definitely on board during business hours most times, unless I'm writing something to share.
Yeah.
Go ahead. Sorry to interrupt.
Well, no, I mean, Nic basically has taught me, a few things here about options trading. Everybody has their own style, but I can tell you, if your style is losing money, that's on you, because we have different strategies that we use in the chat room, everything coming from Nic Chahine, a lot of educational videos as well. Like, when is the right time to do a covered call or a credit put spread, or what is the right time to buy a call or a put. You see, as options traders, we have a very limited arsenal, especially the new ones, because we're just used to calls and puts. We're just 100% directional. Either we bank one day or we go broke the next day. And, that's really not sustainable. That's like, even if you look at the richest hedge fund managers or the best traders out there in the world, they're looking at 70% returns for the year is insane. That's one of the best like portfolio managers or hedge fund managers, 70% for the year. So we need to have the right expectations as well when you're trading options, right? If you think you're going to, 10,000% your portfolio, you're definitely going to be taking on more risk. So the less risky the trade, the more percentage wise, for us, we'll be able to make a win in that trade. And that's what we're doing. We have a long-term capital account growth mentality, right? We're not there trying to, sometimes we try to do falling knives, but that's really not the main thing that we do in the chat room. That's just, if we do want to add a little, see if we can catch the volatility on the right side for that trade. But being able to, work here at Benzinga and use the resources that I have, like, the chat room with Nic Chahine, everything that, he offers here, it has it has accelerated my learning curve when it comes to options. And if you're trying to accelerate your learning curve with Reddit post, with StockTwits post, with all this like nonsense out there, it's not going to help you, right? You need to be able to follow somebody who has a verified track record of success. And especially when it comes to options, because it's way more volatile. It's one thing if you jump into the market and you don't know anything and you're trading stocks, because you can lose some money. If you jump into the stock market with options, you will lose all of your money. And that's an account blow up, right? That's happened to me twice. It's not that I'm proud to say that, but we all have to learn from our mistakes and acknowledge that, there will come a point where you're just, when is that point for you? We're all different, but eventually, hopefully, you will come to a point where you understand that you need some mentorship, you need help, you need guidance from somebody who's already done this, right? Somebody who's already in the trenches, has been doing this for decades and understands it very well. No need to be, going on Twitter, going on TikTok, trying to learn from 15-year-old kids. It's just, it's really bad, right? It's really bad. And I want you guys to be able to take your education seriously, because an options educational course, which, if you're meeting with Nic on Sundays, which is, you adjust the portfolio as you're live trading during the week, as he's giving you guys educational content in the chat room. He's giving you picks in the chat room, and every pick has education. I want you guys to know that, because Nic doesn't just do what most people out there do: buy call $45 or just this basic alert, if you want to call this. That's what a lot of option services do. I know, because I was looking for those services many years ago. It's typically just, hey, this is a call, this is a put, and buy this strike. That's it. With Nic, you get the whole package, meaning he's going to give you a full risk assessment analysis. He's going to give you full analysis of the chart, the fundamentals, the market overview, macro, micro, price channels, probabilities. It's really a learning process. And there are people, like Nic is saying, that trade stocks that just want to learn options or use it for a little volatility or for hedging. But there are also people that are literally not even trading, that just join the chat room so they can learn at a faster pace, because time is money. If it takes you 5 years to really understand options compared to somebody who it takes in maybe a year or less, because you have that exposure to Nic, his trades, his process and everything like that, you will be able to speed up that learning curve and build on top of that to the point where Nic has seen the progress in many people in the chat room, like I have. And Nic is right. This kind of thing did not exist. I know, because I'm an options trader and I've been one for many years, and there was nothing out there with this particular human touch. And remember, you have full support here with Benzinga. We have support Monday to Friday, 9 to 5, and on the weekends as well. And if you ever do have any issues, we have a full team ready to help you. Mostly Nic Chahine is your mentor. Basically, any questions you have about trades, any questions you have about strategies, or you need feedback, the feedback you need is from somebody that knows what they're doing, not from a Reddit board, not from StockTwits, not from any of these public pump and dump chat rooms. And every member that we have, so you guys know, Every member that we have in the chat room is a verified trader. It's a verified member, right? We don't have fake accounts. We don't have bots. We don't have any of that stuff. But I know that we've been here for a while, Nic. We've definitely gone hard on the education, which, I mean, it's natural in you because you're passionate about teaching and all that stuff. Victor, how much is, I think we are doing, by the way, 70% off today, guys. So we're doing 78% off today. You get a laptop with the deal. You get the chat room with Nic Chahine 24/7. Everything that you're looking at right now, this is something we do every day. So we've been going over a lot of the fundamentals of options. How about we jump to tickers like we did last time, Nic? How about rapid fire? That was the name we put it, I think. Rapid fire tickers.
Yep. Somebody, the person that asked for Goldman Sachs, I just, Adobe, I showed them the picture of what to say because I just covered it. These comments still stand. It is a support zone. I would stop out on Unity below this tick, below last week's low, basically. Snow. Okay. I think Wall Street needs some time to, I wouldn't chase it up here. I mean, it's a good company. I would buy it on dips, but not up here. 290 maybe. I would love it down here somewhere for some reason. Nike, I was optimistic. I still am. And now that it's fallen, I am. Before I was short. I closed my short too soon. I closed my short somewhere up here, but it's playing out. So this is not an absolute bottom unless the market stabilizes. Otherwise, it's very feasible for it to come down to 141.
Guys, send over your tickers. Just throw down the tickers.
One on YouTube. LCID, Lucid.
Lucid. You're not gonna like what I have to say. So okay, so the good news on Lucid is set your alert. If it goes higher than last week, let's say 2860, it's the upside. The bears are in trouble, so it could hit 37 with a lot of resistance points. The main one somewhere around 32. So I don't like the company fundamentals long term, but it's definitely a tradable breakout. So I would rather bet on it on a dip than to bet on it long-term upside potential. You're screaming at me, it's got the best car, it's got the longest range. That all doesn't matter. The car that has long range is $150,000, if not more. So it is a niche market by definition. Their cheapest car is over 75,000, if I read it correctly, if not 80,000. So it's not a niche, it's not a mass market as it is right now. They could introduce more cars down the road. Cars are slick, high tech, and all of that. I have a whole spiel about EVs. I don't think EV is the future because it can't be. We can't make enough batteries to sustain 80 million new vehicles a year, which is how much we produce globally. Where are we going to get the batteries for that? 80 million new vehicles, all EVs, sustaining backwards. There's no way we can do that. So it's going to have to be a hybrid model of sort. Unless QuantumScape can actually do solid state batteries, then maybe. And even then, I mean, imagine how many batteries we'd have in the trash cans. That's just unsustainable.
All right.
Lucid is tradable. Breakout. Buy the breakout.
Okay, we got BBIG next.
Okay, that's weird. Somebody asked me to write an article about it. So BBIG, I don't know what they do as far as business. So first thing, I look at the P&L. They do have an income. It's a tiny company from the P&L. So the market cap is 600 million. So it is a tiny micro cap. Now, having said nothing about its fundamentals, chart-wise, this, you can see it. It's a visual divide. Big fail, breakout, tested, and now it's being tested. So they better hold it. It should, the assumption is that it should hold. So if I haven't left it yet, I would stick into it. And I would leave it if it breaks last week's low from a trading perspective. My experience is somebody trading this is probably a fast trader. So you need to delve into lower time frames. So this is an hour chart, 1 hour chart. You can see lower highs, flat bottom right here. So that's my stop out because I don't know how low they're going to go. I'll retry later. Where? Anywhere below here. So lower highs.
Meme stock.
Okay. So lower highs, it's fine as long as you hold the floor. So the action went from this wide to a pinpoint. So I can guarantee you, Can we curse? Shit's going to happen here. So either a pop and a test on this, that is an insurmountable line, in my opinion, at this time frame. So if it ever gets to here, I'd book my profits if I traded it up anywhere here. Look at the how much action is there up there. So as soon as it gets up here, they love it. They're going to trade it hard. Buy, sell, buy, sell, buy, sell. It's going to be congestion. So be careful. Book profits. Floor, stop out, book. Stop out, stop out. I just gave you 2 exit points. Not that it's going to die here. Just book profits. Okay.
All right. Let's see what we got next here. RSI. It looks like that's an ETF. RSI ETF.
RSI. That's a company.
Okay. Then let's just, I don't think that's the one. Let's just skip to it. It's not pretty clear. IPOF, Eric Dudley.
What is that?
That's Chamath's.
Chamath?
Yeah.
So it's a SPAC?
It was a SPAC. Yeah.
It was a SPAC. Doing what? What's it presenting?
I think they're going to merge with, I don't know if it's SoFi. I'm not 100% sure on that one.
Whatever it is,
yeah.
You need to do homework on that end because there's nothing from the P&L clearly because it's a SPAC and there's not, what? Okay, so there's, these wicks tell me that there are buyers here. So if I'm long, it looks like the usual, the $10 mark on the SPACs is the golden number. So you got that working for you. So if you're long, you can sit on that. But what are these big fails? So you need to know and take a bet on it. It's a speculative bet. So please, here's one thing I can tell you. Do not average down on SPACs. So you decide you're going to risk X money on it. Don't say, oh man, I lost half my money. I'm going to double down. No, whatever you bet on it, make it be your bet because it's not Apple. There's no guarantee it's coming back and it can certainly go to zero. So they're speculative bets. They carry a finite risk. Do not increase.
Okay. Then we have UPST mentioning possible short. Yeah. Okay.
Possible short. Why? So yes, it's overly. So this is one of those THTH. It's too high to chase and it's too hot to short. Why on earth would you ever see a lioness chasing a herd of gazelles, chasing the gazelle that's leaping the highest? No, it's going to go to the one limping or the baby. So why chase a tough ticker? Yes, it could fall a lot, but why bother with it? There are easier marks out there. So yeah, it is shortable. The way I would short it, I would do either a credit call spread above highs or a debit put spread way out in time. And I would pay maybe $3 for it with a $10 wide. So the upside potential would be $7. Hopefully that made sense.
Okay. All right. Let's go on.
CLF. I'm going to do CLF. Somebody asked about CLF.
Yeah.
So it's falling into support. If it loses 19, I would be very concerned because it could be going to 16, if not 15 and a half. It has support below 19, but that could be a trigger for the machines to start selling. And it is a pivotal zone, so I would buy the dip. So it's a matter of whether it's going to trigger the dip and where to buy it. If I'm long, I'm not panicking long. If I take longs, I would book into 22 because there's a huge pile of sellers up there. All right, next.
Okay, next, let's see what we had here in line. We had Riot from Augusto Charles.
Okay, I think it's still tied to Bitcoin. No, maybe not. Right?
I believe, yeah, it's definitely a minor.
Yeah. So why is it not skyrocketing? Bitcoin, all my coins are green. What's going on? So this is let me take out the line. Well, buy the dip opportunity in this area will stops. So that comment still stands. What does it mean? It's falling into a prior support level that has served for several rallies. So it makes sense that they repeat the process. Now, the more time you do this, the more crucial it is to hold the floor. If you lose the floor, you're going to dip down to here. I don't think it goes there without some sort of a headline. And I think it's going to find sellers into 32, but it's not going to be the death of it. So being long here is okay in my book for this one with a stop. If it's a trade, I don't know if it's worth a long-term investment. They shifted their strategy completely. So be careful with all these companies. If you like Bitcoin, use the cryptocurrencies that are out there. I'm finding the easiest trades this year, 20 to 30% yields quickly if you just use common sense. if you've never looked into crypto, I encourage you to just jump in. It's so cheap to get started and so much fun to do because it's little money. And then when you get good at it, then you can expand it. Anyway.
Okay, let's go to Tesla.
Okay, Tesla delivered on its promise. So I'll show you my notes about it. Weeks ago, I said it was a breakout. I shared it and I said 790 was the potential target. Sorry about that. From here. So it's delivered that, and it's still in the process. Now, there have been more breakouts along the way, as there have been breakouts to get it here and here. So clear thing to say, the buyers are in charge. They're ping-ponging inside of an ascending range. Continue to do what's working until it stops working. Take out my lines. You can see it. Clear ascending channel. Look at this. Look left. They beat this guy almost. They closed below it. They closed above it one time. They closed at it one time on Friday. They closed slightly below it. But 760, hold 760 and take this out. There's no, I mean, 1,000 is doable. However, it needs the market to help it get there. So if the sentiment tizzy we're having here overall could trip it down to 720, 740 or 720, I would buy that dip, because if the market finally stabilizes, this one will go back to 1,000 by triggering a breakout from 800. So a breakout of this is powerful. That's what I'm trying to say. However, it gets there.
Okay. All right. We have LC with SoFi, SOFI. Yeah.
So SoFi, I'm long. I shared it in the chat room, I believe. So I bought calls naked a couple of weeks ago, I think. I sold calls against them, which makes it like a calendar. That's what I did here. See, this is a calendar call spread, meaning I own an asset out in time, 19 days out. In my case, it's longer for SoFi. And I'm selling assets against it shorter time. So I'm trying to make my entry point here cheaper. This is called a spread. This particular one is called a calendar spread because it switches calendars. I'm buying out in time. I'm selling closer to time to now. Same level, 144, 144. This is not SoFi, but that's what I did in SoFi. In SoFi, I bought 1750 call out in time, and I sold like 25 cents for last week's 1950. So that would have been a diagonal because the one I bought is lower than the one I sold. So I like SoFi long term. I'm long it, and I was just trying to cash in some money. So I'm still long the 1750 call in SoFi out in time at a cheap entry point because I already sold calls against it and they expired worthless in my favor.
Okay. All right. And we have a question here about CEI. Just some insight here for you, Nic. This is a stock that they're like in energy.
Oh my God.
And well, yeah. So like, yeah, they're in energy. And then
What the
they announced a couple updates out there about mining some sort of Bitcoin and that kind of stuff. And there's this guy on Twitter that has been pumping this stock up. And I think this would be a great example when social media trades meet your analysis.
So the all-time high is 105 million on this stock, just to let you know. So whatever it was before, 105 million, that's the all-time high. Boy, it's given back a lot. No, just, there's no way you would get me invested in this. I could bet on it, but there's nothing from the chart long-term. I mean, when did this meme start? Is it a new company starting when? Like, is it one company that jumped into the shoes of another company? So I don't know what happened, but let's talk. The only way I could trade this, and I emphasize the word trade, is I have to be good with charts and actively trading it. So this is a 15-minute chart. I can give you some intelligence there, and that's about it. There are buyers below 3. You can see all these wicks. So you can count on them to be there. Next time it dips into 3 or lower, you can swing trade it, buy it. There are sellers at 3.4 currently. The carrot is up to 3.8, but the sellers have been relentless. And this is the candle to pay attention to. Look left on the 28th, that and the roof here. So I would put a line at 3.4 and start knowing that there's going to be a change in behavior, whatever happens. So if it's going into 3.4, there's going to be sellers. If they go above it and tested for footing. Now it becomes support going forward. So buy, sell, ping pong until one of the sides breaks out. I don't know anything about it long term.
Okay. All right. Let's go to Warner Music Group. I think that's WMG.
Music Group. They're still in business. Yeah, this is not an obvious point of entry. I have a shortcut for that in the chat room. So this is not an obvious point of entry. No way. So kudos if you won with it. Quite frankly, this is one of those mystery charts. Like, what the hell are they chasing? And let's look. So, okay, there's growth, but not explosive growth. Only net income is 270 million. Yet the stock chart looks better than AMD, basically. Not really, but it looks pretty healthy. Probably too healthy. If I'm long, I'm booking profits against these tails. I'm locking profits. What else do you want? I mean, what else do you expect of upside? It's pretty tricky. 80 PE, not that crucial. For price to sales, it doesn't tell me much. So I don't know why it doesn't have history there in there. But not an entry point for me. Somebody saying Sava, please.
I think you already did that one, right?
No, I don't think so.
No?
So Cassava fell on a headline, right? So you want the opposite of that headline to go. I bought the dip, so I'm long Cassava via debit call spread. I believe it's red, so I didn't catch the absolute bottom. I'm happy with it. Microsoft, you can look at my notes. They're all there. Bounce, great. Avoid the fade. Avoid this.
So you have notes for all of these. I mean, obviously these are tickers from the chat, Nick.
Yeah, but, this came up in the 2-hour meeting this morning. We discussed what to call this turn. I said like, what do we call it? Like a broken rainbow, or it's like, how about U-turn? Like, okay, U-turn works. The idea is, okay, it held a pivotal zone. It bounced off of it. But it's so important because it will face sellers. So important for the buyers not to capitulate against the sellers and come back and test it and fail. Then it becomes an accelerant to the prior breakout level, which some support here, but really it's somewhere down here. See that resistance zone? It's going to be forward support, but it's a zone. I would extend it like this. I'd have to change that.
All right. We got somebody here asking for Square.
Okay, I love the company. Wow, look at that pivot line. Holy moly. I'll put a line here to go mortgage the house, the kids, the dogs, the cars. Long. Square. I issued a long PayPal and it worked out a little bit. I like both companies. I like FinTech. I like SoFi. I'm long SoFi. That's why I'm not long Square. I was short Square somewhere here and I exited too soon, but that's fine. Buy the dip with tight stop. That's all I can say. So if it holds last week's lows, it's not going to finish the job and down to here. Otherwise, if it continues, if the sour note continues on Wall Street, it should come back down to here. Anywhere down here is a buyable zone. This should be higher.
Okay. Just want to take a moment here to give a warm, awesome shout out to a couple new friends here, part of the family, Nick. I know you have a pretty big family in the chat room. Well, we got 2 new Benzinga family members here. Couple more coming in here. We got VMart. I definitely remember that email. So shout out to you, man. WestJet also welcome. I love this when everybody gets like encouraged and they start taking the education seriously, Nick, because at the end of the day, man, like, that it only takes a couple bad option trades to wipe you out of the market. And setting proper expectations, and you see this a lot, and I get questions about it as well on the phone, where people are literally thinking that 1,000% returns for the year or 2,000% returns for the year. They think that's what is normal just because of the whole Reddit meme kind of culture thing. And
yeah,
I guess
no, that's not typical.
It's not typical. And the problem is that, then they have that expectation. So like in the chat room, we're making consistent 50, 60, 40, 30% gainers, consistency, right? Consistently making winners instead of trying to shoot for home runs that quite honestly are a coin flip, like Nick says. So yes, it is good to see that a lot of people here are taking the education seriously because, talking from experience, you definitely want to be able to trade with somebody that knows what they're doing. Obviously, it's going to be really tough, right? It's going to be an uphill battle for you. And don't believe me, ask 99% of traders, right? The majority of them either get wiped out and never come back, and or there's somehow get lucky one time and then give it back out. The name of the game is consistency, right? You need to have discipline to apply the methods, the strategy that Nic is doing in the chat room, but you also need to have the consistency with it, so that way you are thinking long term, right? It's not normal to have 1,000% gainer, and those things that happen are very, very rare. And to be honest, if you're looking for those, you're going to end up getting hurt, because eventually you'll realize that stocks don't only go up. And everybody that came in here from the 2020 market is either washed up already or barely hanging in there, because everything was going up. It doesn't matter what it was. So now that we are in a different sort of market, right? Because the market changes almost every day. We have a lot of 2020 retail traders that already got wiped out. We saw less retail traders buy the dip here than any of the prior dips before. So there's definitely less retail traders interested in buying the dip, or they've already been washed out, either or. So trading with a plan, trading with a consistent method is really what's going to help you get out there. I do want to give a shout out to the developers and coders that have made the chat room such a great tool, where you can direct message Nic, and you guys have the chat room where you meet on Sundays, which is awesome. And that's pretty much just a full portfolio update. So even if you're working 9 to 5, or you're like a part-time trader, you do have that opportunity to meet on Sundays with Nic to adjust the portfolio in case you can't be on the chat room every day. If you have a question or need feedback on any trade, you just put in a quick chat and Nic gets back to you right away. So you don't have to be there all day. It's not like Nic takes days to answer. This is literally like a second to second. We're always there. We're always pretty much working together as a community. It is a great and welcoming environment for everybody. I definitely encourage you guys to join, just because you guys are going to be surrounded by a community who really cares about your long-term success. Not just Benzinga, not just Nic, but all of the other members that are very awesome there, very helpful. I see it every day. And the target, right? Understanding that our target, we're not looking for 10, 11 baggers. We're looking for consistency trading. Like I said, some of the best portfolio hedge fund managers, 70% return annuals, right? So like, do you think you can outperform the best hedge fund portfolio manager? So that's why we need to set proper expectations, guys. Also, the tools that you have there in the chat room are pretty awesome, because you can chat directly to Nic, but also take this seriously as a career. Trading is not a hobby. Okay. You reading reports and you liking to read, that might be a hobby. I get that. But when there's money involved, it stops being a habit and it becomes like a serious thing to me. And you should try to approach it that way as well, because your money's on the line.
So let me jump in here. As far as chat room, people think I don't have time to spend all day in there. You don't need to. You just need to be able to pop in and out. That's it. Pop in and say, hey, I'm in trouble with this trade. What do you think? I'm thinking about this trade. What do you think? Hey, what's going on today? What did I miss? You don't need to be in there all day. I'd love to have you be in there all day, but it's a resource. Like, where can you jump in, ask a question, be answered with confidence, and maybe it makes sense, maybe it doesn't, myself or somebody else. So the benefits of the setting is not a statistic. It's actually the opportunity for all of it, everything from research to deployment of risk to managing risk to learning new tricks.
Okay, so maybe we could do tickers for another, let's say, 10 minutes or so.
Yeah, I'm about out of gas here. My throat is screaming.
So we'll give Nic 10 more minutes to hammer off some tickers. So everyone in the chat, starting now, just drop the tickers, and the first ones that come up, we'll pick first. First come, first serve, and the folks in the YouTube as well, you as well, just drop your tickers. Roblox, did we do that one yet? That was the first one.
Not today. No, I did it earlier today.
Okay,
so I can answer it.
will be first, and then IRNT, and then we'll grab some from YouTube.
Okay. Yeah, and if you want to do this every day, just join the chat. He does this
exactly. So Roblox is under fire from headlines from China, I believe, in the gaming, right? So I like it long term. It's a tough hold. You better hold these lows, otherwise it triggers more selling to another low. So If I'm long, I don't add. I'm comfortable not panicking out. It's too late to panic. If I want to get long, I take half position. I add more up here or down here. So it depends on what happens with the market and the headlines. What is it? I don't know. IronNet. Somebody asked me about it today. So this must be a SPAC or something. It's back to base. So do your homework. Yeah, it is a SPAC. There's no income. So I had nothing I could drive for you from the chart other than to say it's back to base. All the hoopla is done. If you thought, oh my gosh, I wish I was long, there's your opportunity. But do your homework. So that's not a good
From YouTube, we have SOS from Sharif Fuzaman.
SOS.
Yeah, I don't know if that's actually a ticker.
Okay, so SOS needs some help. Apparently, I have lines on it. It does have a PNL. So what the heck is going on? So my lines are old. Thank you for alerting me so I can delete these lines. I don't get questions about that stock. So I pointed out a level. So actually, no, let me keep them here. See, level, and look right. Look right. Look what that level did. Oh, yes, we'll hold it. Oh, no, we'll lose it and we'll never retake it out. Right? So that's an important level to have had held. This was a box I did back then. If I extend it that way, you can see that was the second top. So back to base, literally. Do your homework, find out what's going on with the stock. I can't help you from the chart other than tell you it's a broken chart. You need to decide if it's a broken company as well.
All right, Peloton from Nick Williams.
Did we do that today? I did it this morning. So Peloton is too late to panic, but definitely tight stop, because if it loses this low, God help us, this stock is going to get cut in half if it loses this low. It has a lot of support. It's the unlikely scenario, but it's there. So because it's an unlikely scenario, if I'm not short yet, if I didn't leave it, I should stay with it. If I took longs now, I should be happy about it with a tight stop, because this opportunity is too easy and this is too illogical. Both are crazy. So tight stop and enjoy the profits and book them quickly.
All right. Joseph wants Sava, S-A-V-A.
We did S-A-V.
Okay, then we do Zoom, ZM.
Okay, so ZM.
Dave. I'm Canadian, sorry guys.
Ferner. Zoom. So good pop. So Zoom, I have lines. I thought it would hold this, and I was hoping for a recovery there. That didn't happen. Blow it out. So this box needed to hold, stop out. So if somebody took my Zoom trade, they should have stopped out based on my first stop out line. And stop out line from prior trade that actually yielded profits triggered as well. And now they're trying to take that out. So the bulls are at a disadvantage, and I don't understand why. The fundamentals are strong. It's strong. So if the market stabilizes, buyers should start buying it. So I would, oh my God, hopefully you don't hear that. My son just bought a new bike yesterday, so he's tuning it. Better long than a short here, but I don't know what's under there. So from that perspective, I don't want to be long under there. So if I take longs, don't take 100%. Somebody asked about DraftKings, same comments. You want to avoid this. This should be a base, but not a hard line base. You want to avoid that. Good bounce. A lot of sellers lurking in here. So the bulls have to work hard to maintain this ascending channel. Long term, this is a business that will win. So far, they have a lot of expenses, but they do make good handshake deals. So
Jeff Rude from YouTube, we'll give it to him because he's been super engaged all chat. Hymns.
I love the concept. I mean, what? Nobody wants to go to the store and talk to doctors and sensitive subjects. This is a great concept. It's not translating into great price action. So now, this is where, remember earlier I said not all in and don't double down. So this is where it gets tricky. High Leon comes to mind. When a stock loses a floor and can't find the floor, I should not double down on it. This is a speculative bet so far from that perspective. They don't have a lot of history to show Wall Street, so nobody trusts it. So this better hold. Otherwise, it becomes another one of these and these and these and these. So it can go lower, even though it's $6 or $7. So hold this or stop out and just look for the second bottom. That's the trade on this one. So go on faith, buy the dip wherever, not all in. small risk. So let me put math to it. When I say not all in, if I usually take 100 shares, I take 40. And if I add another 40 lower, I'm not averaging down. I'm just taking my lots in sizes versus me. If I usually take 100, I take all 100 here and decide to add another 100 here. That's the situation I don't want average down. But if I break up my risk that you usually take half and half or 1/3 and to 1/3 and 1/3, that's okay. So that's the difference between doubling down and averaging down. So I guess those are the two differences.
So Palantir and Affirm.
Okay, so love both companies. I would be buyer of Palantir here, better than a seller. I would not be a buyer of Affirm because I recommended Affirm to the gang when it was way lower, and then the two bumps came up, and it was an easy win. So Palantir, excellent company, caught up in the meme stock group, which is good and bad because it's bad because it shouldn't be. It's good company with strong performance. It's good because it gets punished on other people's sins, so you know to catch it with confidence. I've sold puts in it at $18 and $19, easiest wins this year. So whenever people are hating it, I sell puts to own shares or sell put spreads, and that's the easiest bet. If I want to go along it long term, I would sell a put spread out in time and buy call spreads at the money out in time. That should be the easiest way to handle it. You also said Affirm, great company. I recognized the opportunity that it was in it down here, and look what happened. Several times I went long and they all delivered. I thought it was making progress. It was coming up against the neckline. Let me take them out. Making progress, coming up against the neckline. I thought it was going to break out, and boy, I didn't know how big it was going to break out. Way above expectations. No way you can get me to get long up here. As much as I like the company, I know they will hate it at some point. This construct is not a solid footing for anything. So most likely they're going to come back to 92 at some point.
All right. Microsoft, I think we've already done.
We already did that.
So I mean, you'll have to listen to the replay.
Or just look at the chart. This is it. Avoid the
Let's
arc.
Did we do Roku?
We did not. So every time I cover Roku, I start with an apology. I'm sorry, Mr. Roku. I hated you for a long while. So Roku has been in business like 20 years, 18 of which they lost money. And I'm thinking to myself, put up or shut up kind of a deal. What's going on? It turns out that all they needed is for Netflix to establish the environment that they actually need to prosper in. I don't understand who pays them that money, because there's no use for Roku in my life anywhere, and I'm all about streaming. So I don't know what part gives them the money, but they do make it. And they shut me up by actually turning positive, and they actually are profitable and growing. So buyable dip with a tight stop. Why? Because it moves super fast. They have solid footing here, but if that solid footing fails for whatever reason, and remember, sometimes the stocks fall through no fault of its own. What if we wake up on Monday and the Nasdaq is down 4%? You think Roku's going to have a good day? No. Plus, this is a hideous candle. So there's a lot of scar tissue at 340. So when it gets to 340, the sellers are going to step out confident. So the way I see it, watch this. So you talk about Main Street investing. This is how I draw potential trades. So this is the neckline that I'm talking about. You know, they fight it out. They come back here. Boom. Sellers show up because of that candle. They drop it. But if the buyers can maintain a higher low trend, they come up and they go above it, and look at what they drew. An inverse head and shoulders, which is bullish to the tune of this much from the place they break out. Then the fight moves to another pivot zone. Rinse and repeat, same process at another failing point. So know that there's support, but stop out if it fails, because you don't know how far they want to go. If it's a trade, if it's an investment, take a small bite, leave room to add lower or higher. If it gets to 340, if it's a trade, I book it and wait for the dip to reissue the same trade, and then or buy the breakout above 340. In other words, if it rallies to worth 340 and I'm still not long, I don't get long until it breaks through 340 because I'm too late. Same exact comments at 370. It's at 72.
So let's do one last ticker. Have we done a crypto one yet?
No, let's do a crypto. So my
Let's do
crypto,
and this will be the last one, and then
okay.
Nick, feel
So I'm going to give
we'll
you
let him
a
go.
couple of tips on crypto. There are no experts. This is your chance to get in on the ground floor of expertism. So to become your own expert, there are no experts. Try to find something that causes you to make good decisions on crypto. So I didn't start until late. I've been tracking them for a while. And then I finally opened an account. I use crypto.com. And I started with small money. I started making decisions. Anytime I see panic in the market and crypto falls 30, 40%, I just immediately buy. And I pick the coins I understand. And I added a coin recently, Solano, because of a chain of events. And that trade is up like 26%. When it fell out of bed, I bought it for like 144, I think. And it was up to 170 last night or something. So, and the cool thing about it is you don't need to buy a whole coin. You can allocate dollar amounts. So whatever it is, pick something you can track. So for example, my son chose Doge. As ridiculous as it was a joke when it first came out. It holds water. It trades like a regular stock. And I told him when it hits anywhere below 0.18, buy it. And he has, and he, if he wants to sell it, it's gone like to 26 or whatever, 28. So he made 20, 30% on his money, and he's 19 at the time. So in this case, when it rallies into 52,000, this is Bitcoin. It's not a time to start longs. It's a time where it's going to trip on this. But if they take out 52,000, don't short it because it could get to 60 and 64. What? Yeah, I said the same things when it was 9, and I said it could get to 16 or 18, and then it did this. So I'm just strictly judging it by the charts. There are no experts. So here's my logic. Bitcoin is the leader. I don't want to mess with it. So the second one is Ethereum. It has a legitimate application in financial technology. And the biggest competitor to Ethereum is, I think, Solano now. So do your own homework, but this is my helicopter view on things. And the one thing that I found is that I can collect 10% interest on some of the coins if I would lock my money. So I found a stable coin that tracks the US dollar. It's not guaranteed. It is not guaranteed. So it's not like putting money in the bank. So I'm taking a giant risk. I don't know the company. I don't know if they're going to fall. They're not FDIC insured. Okay, they're a legitimate company active working in the US. But if I lock my money 3 months at a time with them, they will reward me with 10% dividend yearly. So 0.85-ish, 0.83 a month percent. Guess what? The yearly average I get from the bank is like 0.6 a year. This is 10%. So it's worth the risk for me to put a little bit of money in that coin 3 months at a time. And I'm not going to reinvest the dividends. I'm going to take the dividends out. And at one point, I'm going to cover my base with it. I'm just going to leave it. So be creative with crypto. Don't be crazy. Just be creative. Investigate. Don't fall to the ridiculous argument of what the fudge is crypto is fake. Of course it's fake. So is the perception of gold. Who says that a yellow rock is worth more than a brown rock? There are other things that are just as rare as gold. They're not used as a trading asset. Enough people believe in it. So who cares if you believe in it? If you're trading for money-making abilities, set your emotions aside and acknowledge the fact that this is an asset that has appreciated more than anything else on the planet in the last 10 years. Nothing even comes close. And you choose to shut yourself from it. So that's a conscious decision that you're allowed to do. But I think it's a mistake. It doesn't matter that it's man-made. Gold is in the ground. Hey, I'll tell you what. So you like a painting. There's an artwork out there. Let's say a Monet. It's worth hundreds of millions of dollars. They make replica prints of it, right? So those prints are set price. They say the price of that print is $50,000. It's fake. The print is fake. Nobody's upset that it costs $50,000 because there are No, 300 million people in the world that love it. Therefore, they established the supply and demand, and it's worth $50,000. How is Bitcoin different? Fake or not fake? It's an asset. It's got a serial number. You can put it on a hard, in a zip drive or jump drive or whatever. It's there, and it's logged, and it's worth X amount. So whether you believe in that concept or not, I think it's a tradable asset. That's all I'm saying. So look into it. The concept is not ridiculous. Have you seen any sci-fi movie with cash? No. We're going towards a cashless society, and this is like the stepping stone to it. All this foray they're doing, all these ridiculous things they're doing in crypto, that's the door for it. So I'm open to it, and you can play around with little money and learn a lot.
That's a great way to end it, Nic. So just for everyone to know, we're not ending the stream. Rodrigo and I will be staying on to do Q&A about Nic's chat room, as well as his option strategies to answer questions. But we're going to let Nic go because he's feeling under the weather and he needs to rest. But this stream will keep going. We're going to answer some questions about the chat room, any questions that you may have about what it includes, cost, refund policy, that kind of stuff. And Rodrigo's experiences, because Rodrigo spends a lot of time in the chat rooms for options as well, so he'll talk about that. But thank you, Nic. Again, it's always a pleasure learning from you.
I appreciate it.
I'm bullish crypto too. I've been trading Ethereum in and out the last couple of months, and I'm super bullish on it as well. So thank you again, Nic. And until next time, until the next session, if you did join the Inner Circle chat room, you'll be, technically you can chat with them even tonight or tomorrow. During market hours for sure. So you'll see Nic then in the chat room tomorrow. Rodrigo and I will be staying on here. So thank you again, Nic, and we'll talk soon.
I appreciate it. I'm gonna leave, so the screen is gonna be in your hands from here.
Yeah, we're gonna look at Rodrigo now.
Thanks, everyone. I'll see you in the chat room later. Bye.
Perfect. Rodrigo, are you still there?
What is up, people? Okay, number one, congratulations for staying here, right? And going over the educational segment that we have here for options. We're only getting started here, so don't go anywhere. We're literally just getting hot here. We're getting warmed up. So as you guys saw, Nic knows the stuff about options. If you want to do that every day with him, you can go to the chat room. That is where Nic is all day. That's where you can find him nonstop. He doesn't really stop doing options. Like every time I talk to him, it's like options related, and he's always already doing something else about options. But there's a lot of you guys here that seem to be a little bit on the newer side, which is definitely good because, you want to get the education for options when you start. You don't want to get it once you're down 80K or 100 or 200 grand. There's always a lot of calls that I get about that. And that's why we're doing this, right? That's why we started doing these educational workshops, because we know where you guys are standing and we're trying to give you the best possible trading experience that you can. As you know, Benzinga is for retail by retail. So there's really no gray area there, when it comes to what we do here. So yeah, I think where I left off was that you guys need to start taking the trading part seriously in your career. Stop treating it like a casino. Stop doing these crazy wild out of the money calls that expire next week kind of moves. I know them. I used to do them a lot. I still do them like in a small amounts for like momentum trading, but for the most part, I'm really looking at long-term capital account growth with Nic's strategy that we do have in the chat room. And typically what we do our own research, right? That might sound weird to some people, but we definitely look at the economic indicators, the numbers, the indexes. We try to reason everything we can out of it, because ultimately, if you are just trading, if you're trading what CNBC is showing you, you're already too late. And that's typically why retail is always going to be holding the bag, because you just buy it whenever CNBC puts a little headline out there and you're chasing headlines, right? And that's really not a good strategy. That's typically a good time to sell. If you ask me every time, hey, Joseph, yeah, I'll respond to the email in a bit once we're done here. So yeah, it's definitely something important, guys. Creating your own strategy, doing your own research. Obviously, Nic gives you the upper hand with this. And any feedback that you need on trades, it's like, one text away. But whenever we don't have the education, I mean, like it or not, eventually we're going to fall into emotional trading, that fight or flight mode. And trading in that mental state is never good. It's never healthy. It's really hard to get ourselves off the screen once we know, well, we don't even know, we know it, but we can't do anything about it. Most times emotions take the most out of people. And emotional trading is what happens when you don't have a plan. Emotional trading is what happens when you don't have a strategy. And that's pretty much what we do all day in the chat room, setting up strategies, adjusting the portfolio. We do this almost on a day-to-day basis, but most importantly, we do this on a weekly basis. We do this on the sessions that we have on Sunday. That's when we really start going hot, right? Because you have Nic and he just goes nonstop. If you like, this is just a sneak peek of what is going on there in the chat room. And you guys need to just realize, number one, that you need to have some sort of foundation, right? You need to have some sort of educational foundation when you're trading options, because number one, if you're just doing calls and puts, you are the person I'm talking to, because this is mostly meant for you, because the volatility that you're dealing with is very high. And what we're trying to do in the chat room is to get long-term gains, right? We're definitely not trying to put all the account on calls or anything like that, because we understand the risk. That's what Nic was talking about at the beginning, managing risk. That's the first thing that you need to do before you even look at a trade. Manage your risk. Know when you're going to get out, when you would consider, selling for a gain or a loss, all that stuff. Having a plan is what successful traders do. The people that don't have plans, you buy whatever's trending on Reddit, you buy whatever's trending on StockTwits. As soon as you buy it, it goes down and you're wondering why you just can't be in the green. Well, I don't know if you were aware, but there are hedge funds that specifically short, like they specialize in shorting trending stocks on Reddit, trending stocks on StockTwits. Many of these stocks don't have fundamentals to back them up. Some of them might, you could say, but you can argue that point. But for the big majority, these are just short squeeze plays. There's really not much fundamental meaning to the move. It's just retail traders buying and you got people on Twitter pumping it. You got all this stuff, TikTokers, all that stuff, which is definitely not what we're trying to do in the chat room. You can make money out of those volatility plays, but it's really not it's not like Nic said, right? That's something we would only trade if we were to do anything. It's not something that we would consider owning or buying at a lower price for a long-term, purposes. But with all this in mind, keep in mind, education is a lifelong process. So if you think you're trading options today and, next year you think it's going to be the same, the market is always consistently changing. And we always need to continue to adapt ourselves as traders with the right option strategies. The markets are always going to be in a consistent flowing mode, and us being able to properly trade that momentum, that movement on either side is important, right? The mentorship with Nic is important. It's not just, this is for 1 year, what we're doing here, like the actual options inner circle chat room with Nic, but this is something that I definitely will be continuing getting education from Nic, because I've seen his strategies, I've seen his research, I work with him behind the scenes on stuff. And I can tell you that he's very knowledgeable with options, to the point where you definitely need somebody like that. And I mean, somebody with real experience. I'm not talking about somebody on Twitter, Reddit, or TikTok. That's the opposite of what we do. I follow people that have a verified track record of success, that approach the market with a mentality that I feel comfortable with. And the experience, I think 20 something years Nic has in options trading and the market in general and mathematics. It's really somebody that I feel comfortable trading with, because he does understand risk very well, way better than I do. And it's really something that I keep learning on and building on, to the point where these things eventually get drilled in your head and you start feeling, that sense that, hey, I am making progress, right? Your behavior is really is what needs to change, if anything, if you're just doing YOLO plays. And controlling your behavior is very hard. But as you see the results and you get the logic and you understand it and you see it work, that's really when things start to connect for most people, from what I've seen. But don't forget that this is all for retail, right? Everything we're doing here is for retail traders. Benzinga was made for retail traders. I'm a retail trader proudly. Almost everybody here is a retail trader, and we need to help each other out because, to be honest, we got the short end of the stick, right? Let's just cut to the chase here. Retail has been holding the bag for way too long, and somebody had to do something about it. And that's why we started the Options Inner Circle chat room. It's the largest community of educated option traders, and it's global. There's people from Australia, from Europe, from Brazil, Mexico, Canada. There's people from all over the world, and it's really interesting to see everybody's perspective, everybody's different opinions on not just on the market, but also when it comes to options trading, because some guy might be a PhD mathematician there, right? And you got people from all sorts of backgrounds, which is great because you're literally trading alongside a community that, number one, is there to learn, two is there to make money, obviously, and three is there for great experience. And you have all of those in the chat room. There's people that are very nice. It's a very welcoming environment for everybody to learn out of all stages. It doesn't matter if you're new, if you're starting, if you're in the middle. And this is a lifetime discount. So that means that like whatever you pay for today, even if the price goes back to whatever it was before, you'd still keep that discount forever. And keeping in mind that this is for retail traders, right? This is not for hedge funds. This is not for equity firms. This is specifically made for retail traders that want to get that edge in the options market. And that edge, right? You really can't have it if you don't know what you're doing, unfortunately, because checking out Reddit for the trending stocks is not an edge. That's an edge. So following a process that works, really not doing these crazy plays that, from what I've heard and seen and experienced, total capital account destruction. Some people can't ever come back to the market. Some people lose the house. Some people lose the wife and everything. So it's something that you definitely want to take seriously, because look at your targets, right? How much do you think you're going to make from here to let's say in a 1 year span, right? It's 1,000,000% or like 10,000%. You need to be a little bit more realistic, right? When it comes to your trading and your objectives. I'm happy with a 40 to 60, 70% gain for the year. That is I'm okay with that. That's 70% is what the best portfolio hedge fund manager does. And you can look at Wall Street. There are people that their portfolios are up 18% for the year, 15% for the year, and 17% for the year. And they brag. And those are numbers that big money brags about. So not sure why retail thinks those numbers are bad, but that's really the problem, right? We look for the bigger reward, and that includes bigger risk. And with that bigger risk, well, you blow up your account with these calls and puts. So finding a strategy, finding something that works definitely helps you guys. And don't do the whole vacuum trading, because that whole vacuum trading killed me when I started. It was just me, a computer, like 10 monitors, just reading headlines, all that stuff. And it just wasn't a strategy that worked. And I don't know anybody that's been doing that long term. At one point, you will eventually, every trader, it doesn't matter how advanced you are, even equity firms and hedge funds do this. They meet up in a community. They meet up together to talk about trades, to talk about strategies, ways to make money in the market. Obviously, they're talking about other stuff, but as a community for retail traders, we are talking about how to better improve our personal options trading skills, because this is something that you will take to the grave and teach your kids, hopefully, how to do it, because financial education is important. And the more you know about it, the better prepared you are to take advantage of the volatility in the markets. It's that simple. So knowing what you're doing and having that mentorship, that community vibe, that welcoming environment where you get every question answered, every trade you want to talk about, you talk about it and you learn every time. Like every single day I open the chat room, I'm learning a couple things because of what Nic is talking about. Whenever he's as the market changes, there's things about stimulus packages, there's things about increasing taxes, there's so many things in the news, the dollar going on right now, Bitcoin, everything impacting everything else, and just digesting everything and being able to understand it all in one. Also looking at the economic numbers, doing the research, doing the work. And I know a lot of people want to make money, but not a lot of people want to prepare and do the work that goes behind that. And that's just how life is. So having Nic doing that for for everybody else here, because maybe you don't have time, maybe you're busy, right? And that's what Nic does. He pretty much sums everything up for you, and he explains it to you in a way where you know how to take actionable trade ideas that he's going to give you. And just don't fall back to the emotional trading. Don't do that social media trading, because you need to be able to look at yourself from the future and to today and say that I did something right for me. That meaning that, like, your future self would tell your present self to get the education, to stop winging it. So this is something that some people need an epiphany for them to realize it, right? You have to blow up your account to realize the stuff. And it shouldn't be like that. You shouldn't have to wait to blow up for you to try to get education and try to find to improve your trading. It's just not the best way to do it. I blew up my account twice when I started, and I wish I would have had like a mentor or somebody like Nic that could have explained things, because there's a lot of misinformation out there, who could have given me guidance on my options trading, on my strategies, so that I wouldn't have had to learn the rough way, the lose your money account way. And I would have learned in a much better format, educational, with a community, build relationships, all that stuff. So if you're new, this is legitimately like the best thing for you, because this did not exist 1 or 2 years ago. It wasn't there. All you had were these pump and dump chat rooms, public, where there's fake bots, there's profiles, there's people obviously for the pump and dump chat rooms, all these Discord pump and dump chat rooms. That is the biggest mistake that most retail traders will make with everything. So remember to just focus on the education, focus on what matters. Don't really have that mindset where if I don't make 10x, if I don't make 10 baggers on this trade, I don't like it, right? We need to set proper expectations for everybody, especially if you're new, right? 2020 is not a normal year. Don't expect that to repeat again. Not everything is going up, obviously, which is why almost every retail trader from 2020 got washed up. So the people that are still in the market, either barely hanging on or trying to finally get that education that we really need, right? Because 2020, you didn't need education. You just bought it and it went up. So Nic went over some of his winning trades. As you see, we do have a very set strategy that we're using for 85, 90% success rate on these spreads that we're doing. We do try to catch the falling knife sometimes with maybe a call, but this is something that we just allocate a small amount of the portfolio to. It's not, we don't put the house on any trade whatsoever. It doesn't matter what kind of conviction you have. We believe strongly in diversification and being able to spread your risk and managing your risk accordingly. So we definitely build trust with you guys here. We know that you guys are retail traders, and we, like I said, I've been on both sides of the coin. I can tell you that it's tough. It was tougher as a retail trader 2-3 years ago, when there was almost nothing out there, just these gurus, pump and dump chat room people that you know who I'm talking about. But yeah, that's really a huge mistake. And I feel bad, because then people call me and they're like, hey, I lost money following this guru on Twitter. And it's like, how did you think that was ever going to work? Right? This is not even a real person, as far as you know. So definitely, I encourage you guys to follow somebody with a verified track record of success. Nic has been doing this with Benzinga for like 12 years or such. And it's something that it benefited me. I know it can benefit you. It's just a matter of taking the step, right? Don't wait until you blow up your account to start doing this. That's what some people do, because that's their epiphany, right? Maybe your epiphany is different. Maybe you're saving for a house, or you want to put your kids in college and you really want to make consistent income. Well, you have a more serious approach. That's how it should be. So whichever goal it is, getting with the right community, getting with the right mentor, with the right set of tools is always going to be your best friend. It's not just giving you a chat room with Nic, but you also meet with him on Sundays, where you talk about trades, you talk about strategies, feedback, all that stuff. And it really is more like, just don't skip the steps. Don't skip the steps. If you are trying to get into options and you don't even know what a call is or what a put is, and you're already thinking about putting that trade in, man, hold up. Like, you do not skip the steps, because that's when you get hurt. Being able to having that education pre-trading, because there are people that join that haven't even started trading. They just want the education from Nic. So don't skip the steps. Acknowledge where you are. Be honest about it. Don't lie to yourself. Get your ego out of your head, because that's a big killer in trading and anything. But get the ego out of your head and understand that if you are starting out, like you really need to approach this as an education, because it is a revenue generating skill. You went to the school to learn how to think, but they didn't teach you how to really make the money. All right. You just figure it out as you go. So with this, with the options course here with Nic, the options trading course that we have here with the chat room, it does give you that opportunity. It does give you that direct financial education that you don't get in college. As a finance major, I can tell you, we never saw anything about charts or about PE ratios. You know, like you see a few things here and there about calculating offerings and dividends and all that stuff, but that's on the money management side. You know, as a retail trader, that doesn't help you much until once you get deeper. If you do want to look into the fundamentals of a company, yeah, you're going to need to know math, right, at one point. So definitely important. Do this when you start. You know, it's like a tree. When a tree is growing, if it's growing bent and you leave it growing to grow bent, it's going to grow bent. And when it's too big, you're not going to be able to, you know, make it straight. So that's why whenever there's a tree coming out and it's bent, they always fix it when it's very early in the life of that tree or plant, whatever it is, so that it grows straight from the beginning. And that's the analogy that I like to make when it comes to education. That's how it works. A lot of people have been trading for 20 years, and doesn't mean they could be easily losing money for 20 years. So how long you've been doing it doesn't really matter that much if your P&L is not where it should be. And a lot of traders struggle with this for 5 years, 10 years. Some people just get wiped out. So don't try to wing it. I can tell you that, you know, blowing up your account is not a nice feeling. And you're really falling into the trap. You're really falling into that trap. Big money trap wants you to make these dumb trades without any, you know, without any like plan or strategy. That's how institutions make money out of you, buying these crazy calls out of the money. That is how they benefit. They pocket from you. The option expires worthless. Well, who's making the money then? Right? You paid for it and now it's zero or whatever it is. So that's why options are a very, very complicated financial derivative that if you're not familiar with how this stuff works, I really think that you need to get some sort of education and guidance. Otherwise, you're just going to be a chump in the market. They're just going to be taking out your money every time. That's what they want. And you need to prepare yourself. You need to make informed financial decisions. Otherwise, somebody else will make informed financial decisions for you. And that's what we're trying to do here. We're trying to show you how to think. We're trying to show you how to really think critically about options trading and understand this is a full year trading course. This is for the full year. I just want to set proper expectations with people here so that, you know, we're all on the same page. This is not Lotto Ticket 101. This is not Lotto Ticket 101. This is basically showing you how to trade options beyond the calls, beyond the puts. And that's just some information I wanted to give you guys because this is a great thing that Benzinga is doing, to be honest, helping traders all around the world, you know, be able to improve their options trading. I've seen some great results, and I've seen a lot of people, you know, just starting be able to improve and go into other types of option trades and really understand the mentality, really understand what's going on. And that's great to see that. Great to see the progress that a lot of people have had. That's what I got on my end here, Harvey.
Yeah, so we had some questions about on YouTube about the product here. So let's just go through them quick. Do you have a trial period? Yes, we do. There is a 14-day money back refund guarantee. So that means if basically if you purchase today and you sign on and you're not happy with the information in the chat room, within 14 days you can come back to Benzinga support at any point in time and say, hey, you know, I'm not happy. I want my money back. And you'll get your full 100% money that you spent refunded back to you. Average investor, is a laptop good? Yes, it's an 8 GB laptop. The model depends on what we have in stock. But as soon as you purchase and we get your address, once you hit the 14-day refund period, it gets shipped out to you and you'll get it right away. But we guarantee that laptop can be used for being able to be used for a full trader. So anything that you want to run for trading purposes, it will be able to run. I actually think, Rodrigo, you have one of those and you use that full time for your trading, right?
Yeah, I actually have two of those because I do have a couple of computers for here and there. And I pretty much have my chat room open all day. And I just want to clarify here in case other questions might come along. The laptop is 100% complimentary. It is a gift. It doesn't change the price. It is a gift that we are giving to you. If you don't want it, I can keep it. I would love to have more laptops here, but yeah, it is totally complimentary. Just want to make sure that people know, Harvey, it doesn't affect the price or anything.
Yeah, and it's only for today only. So just for you guys to know, like these offers that we do on Sundays are honestly they're such good deals. We're telling you that you should go on it because it's not going to happen again very often. Very rarely do we have stock for laptops, and we're given permission to give them out as gifts. So usually the price is at the very least is $12.97 without a laptop. So today for until midnight only. I think it's Pacific Standard Time midnight, so 4 a.m. EST. That's when the offer runs out, or until we run out of laptops. So if we run out of laptops too early, then we're gonna have to close off the sale. There's another question here. Is there a monthly option? Anything in related to if you need more information about the product or you need some sort of payment plan, Rodrigo here will give out his phone number and his email address. We'll drop that in the chat.
Yeah, we've been putting that number out there, guys.
Yeah.
If you need to talk to somebody, you know who it is, right? Who are you gonna call? Rodrigo. Da-na-na-na. All right, guys. No, but seriously, I'm going to help you with everything that you need here when it comes to that. So the other thing I did want to mention here, guys, the options trading course is for the full year. It is not like a daily thing. As far as it's not day to day, it's not month to month. It is a full year commitment that we do here to you, right? Benzinga, it's our commitment to you. We want you to learn. We want you to get ahead with your trading. And we want to be able to help you stop doing whatever mistake that you're is, right? Either buying too high, vacuum trading, following social media. I don't know what you're doing, okay? Because you could be doing something way different than what the guy next to you is. You know, the mistake that you make is might not be the mistake the other person makes. So we're all in different place. And obviously this is not personal financial advice to everybody, you know, because everybody's different. Everybody has a different portfolio, a different risk profile. You have a different way of looking at the market, different target dates, different goals of what you want to achieve. It's really a loaded question, you know? So we try to help everybody regardless of what your mistakes are. And it's good because you might be learning on how to prevent a mistake that you haven't even thought about already. And that's where I see a lot of the value where we start interacting as a community. It's like I read Joe's question. Joe has a question about buying calls way out of the money with a weekly expiration. And then let's say Nic answers it with an answer that I want to hear. To be honestly, like I'm very interested in hearing about Nic's opinions when it comes about trades, because he's been there, he's done it. And I did want to take a moment here to welcome one of our newest family members, S. Godinez. Shout out to the man. Shout out to the man, Godinez. Good stuff, man. Good stuff. It's never satisfying enough to see that you guys take interest in the education, because it is the right way to do it. And who better to tell you than somebody that went the wrong way, right? Somebody that learned through the ways you don't want to learn. It's just definitely, as an options trader, I can tell you, you can lose your account in like 10 seconds. Like there could just be a bad PR, or there could just be like bad economic news. And if you're not positioned correctly to hedge your trade, or if you're just positioned on one side, you really, you know, just a 15% drop on a stock can just make your calls go single digit, man. So you always have to be careful. You always have to plan your trades, plan your strategies. Don't just go out there, do crazy stuff. Don't just go out there and buy these weekly calls out of the money, unless you know what you're doing and you understand your risk. And if you understand that you can lose all that, well, that's you, right? That's on you. But if you do want to make consistent long-term growth in your account, if you're serious about making income and a revenue for yourself or your family, whoever it is, whatever goal you have, I really think education is the most important part of it. Because I mean, I don't know when things changed in the world, but like if you're a neurosurgeon, right, or a gynecologist or whatever, like a specialized doctor, you don't just skip high school, college, you know, being a general doctor, and then you say, hey, I want to be a rocket scientist. You can't skip the steps and think that you're going to have success. That's the shortcut, the easy way. Easy come, easy go, right? That's just how it works. If you go in there and you think it's all easy and you start making these wild trades, that's what's going to happen, right? That's what happens to like everybody in retail. I think 90 something percent of people have blown up their account at one point or had significant losses, especially retail. And don't think that hedge funds and equity firms are untouchable. They also lose money. It's not a big percentage of them that make it. So there's no holy grail. It's not like you're in an equity firm and suddenly you're banking. That's not how any of it works. It really comes down to having discipline. A lot of the biggest traders out there that had amazing years, even during when they were going short, they eventually lost like half of it back. So adjusting your trades, adjusting your portfolio, getting your ego out of the equation, because that can be an issue as well. Not acknowledging that we need help. That's really hard. I struggle with that a bit. I thought that I could learn it. I have a finance background, and I know other people with finance backgrounds in the industry. And let's say what doesn't help as much in a market that is not, which doesn't really follow logic sometimes, right? You can be looking at a good PNR. You can be looking at a good earnings report and the stock will still go south. You can be looking at the best earnings call and everything, and suddenly a short seller comes out and shorts it all. Short. And then you had calls, you lost half of your money. So you really can't predict the market. You might be looking at a nice chart that is making higher highs and higher lows and all that stuff. And then a hedge fund just comes in and just shorts it to the ground. And then they go on the news where typically, they go to CNBC or whatever, and then they start talking bad about the stock. And, that's just how it is. That's how it is. If you've been in the market long enough, you understand. And it's really important to separate what we do here. We definitely focus on the retail trader. The tools that we have are for you to use and benefit from. And, it's not like if you're looking at something on CNBC and trying to trade it, I'm telling you, man, that's not a trade idea. That is not a trade idea. They're doing entertainment. They're reading off a teleprompter. They're getting paid to read off a teleprompter. I want you to understand that, okay? They're getting paid to read from a teleprompter. So they're not obviously trading. They're not even allowed to trade, right? So never take trade ideas from there. For anybody you see there, there's a few good people there. Josh Brown, a couple other good guys, but for the most part, you got to understand they are an entertainment news. They are in the entertainment, right? They have this beautiful segment, market sell-off, right? They put the bears and all the stuff there. They bring in the short sellers. They bring in the guy that shorts Tesla. They bring in all that stuff, and they make a show, and they make like this whole entertainment thing, and literally impacting your financial situation. Because they literally are in the business of getting clicks. They are like clickbait, you could call it. That's really what they've fallen into. And it hurts a lot of retail traders. And that does not make me happy. I definitely want to see you guys succeed. I care about your long-term success. And part of that is being real with you. Part of that is being honest about the market and all the stuff, right? Nobody's going to give you a manual and be like, here you go, but you'll have to learn it the wrong way by, feeling it and seeing it and experiencing it. Or you can join the chat room with Nic, because Nic has already gone through that so many other times. And, I can say it all day, but obviously you guys have to make the call, right? I mean, you guys have to determine if you're serious or not about your education. If any of you guys are like a doctor or like a lawyer or any, career, you could say, you understand that it takes work and it takes time for you to be able to get at a certain level that you want to be. And acknowledging that is the first part. If you think you're a hot shot, then, you might go ahead and try to be a hot shot and then just blow up your account, just like 99% of retail traders. So this is why we're doing the outreach. This is why we're going hard for you guys, because we want to know if we just want to help you guys. We know what the issues are with retail trading. I know I'm a retail trader. So we're definitely here just to help you out and throw any final questions that you guys have.
Guys, any questions about the chat room, about Benzinga,
Nic,
about Rodrigo, about Rodrigo's cat, about any questions that you guys have? about, ideally about the chat room, because then we can answer them.
There's no more cats. Just want to set expectations here. We ran out of cats, but we do have a few laptops. I think we have like 5 left. Yeah, mistakes are your biggest teacher, 100%.
No questions today.
I think we're good then.
Yep.
Okay,
All
seems
right.
like
Well,
everybody
we'll drop the email and your phone number one last time. Again, if you're looking for, if you have a Benzinga Trading School or a different chat room and you want to switch, or you want to talk about maybe like a monthly option, email Rodrigo, give him a call, and we can figure out. Benjamin, we'll drop Rodrigo's email in there, and you can ask him exactly what you're looking for.
Yeah, I'm going to be helping you guys out. I'm just going to take a couple hours here of the day. I know you guys already emailed me and called me, so I'll reach out back. We'll, for a little bit so that we can get you set up. And then I do have to get back to the chat room with Nick because I know that we were talking about some strategies there. So feel free to join, welcome us. I mean, feel free to join us in the chat room where we're talking about options trades all day. And, it's one thing, whatever you get free on YouTube, but once you actually talk to somebody who knows what you're doing, your eyes are probably going to open up. And I know there's a lot of retail traders who are like that. So my final advice here is to acknowledge when you really need a mentor, and the free stuff.
Aggressive Bull, how often does the
expensive.
mentorship team meet? So when you're in the chat room, Aggressive Bull, the chat room is live 24/7. So you can talk to them any day, anytime you want. Nick does a weekly session with the inner circle members. So every Sunday morning, he actually did it before today's webinar at 1 p.m. So Sunday morning, he'll meet with only the people in the chat room, and they'll just go through a huge presentation of what he's looking at, what he's trading for the week, how the last week went, any tickers that people have questions for. That's how it works, Aggressive Bull.
We got a question on Zoom, Mohammed. I want peer-to-peer training. So this is the closest that you probably ever will get to have a sort of a one-on-one mentorship with somebody who is worth having it, right? So yeah, you can do that with Nick. That's what we were doing actually before we started today's options workshop. We just met. It's only for chat members. We meet every Sunday and we go over our portfolio. We adjust the trades. We go over the news. We digest the news. So this is really just a little bit of what's going on. This is like a partial sneak peek, you could call it. The chat room gets a lot more traction for sure.
Perfect. All right, Rodrigo, I say we close it off there. Aggressive Bull, it is a chat room, but like we said, there are weekly meetings where they do a screen share and voice calls. So that's how it works. Well, if you signed up and you registered for the Zoom, you'll get the replay for this. Otherwise, you'll get it on YouTube. For the folks on YouTube, if there's also a starter pack that you can look at in the description here. For $97 a year, you can get one trade or 2 trades per month for Nick. But that's not what you're going to get for the chat room, but that is something that you can look at too. We'll drop that link. Well, the link's in the description. You can take a look at it. It's Nick's starter newsletter. Any last words, Rodrigo, before we close off here?
Well, just want to wish everybody good luck trading. I want you guys to take it seriously. I'm pretty passionate about it because I've been there and I don't want any of you guys to blow up your account. So if I can only save one person from blowing up their account, to me, that's enough satisfaction because, we're doing what we can here. We're trying to outreach people as much as we can so that they don't have to go through the rough way. Some people are knuckleheads and they'll learn the rough way, but we definitely want our members to be successful. So everybody here that's already a member, I see you, Jeff, Rude, you're the man. A lot of familiar faces here, a lot of people that are familiar with Nic, and that's great. I've seen the progress in a lot of them. They attend the educational workshops. So if you guys keep doing that, you guys are going to be sharp, and that's great. That's the right mentality you need to have. And appreciate you guys for being here with us on a weekend.
Yeah. Thanks a lot, guys, and happy trading.